Welcome back to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Catastrophe in waiting. Jerome Powell and Janet Yellen warned that a US default due to a failure to raise the debt ceiling would have disastrous consequences. A dangerous man. Elizabeth Warren slams the Fed chair over his record on financial regulation, saying she will oppose his re-nomination. And Total Energy CEO tells Bloomberg that the energy crisis could last until winter. We'll hear from our exclusive interview throughout the program.
So let's take a look at the futures. Actually, they're holding up okay, actually, Tom, when it comes to the DAX futures, but also the FTSE futures, maybe the only ones that are kind of trading sideways for the moment. Yesterday, we saw a really big sell-off in the U.S., and that's because of concerns on the debt ceiling, reflation trade, because of expectations that the Fed will move sooner than expected. Tom, what do you have?
Yeah, U.S. yields above 1.5%, and the consensus seems to be that those yields are going to grind higher. Things are opening, of course, in the first few seconds of trade. The FTSE 100 is flat, as the futures had suggested. You do have these stagflationary concerns now in the UK. You saw gilts above 1% yesterday. The pound was weaker. The challenges for the Bank of England as growth continues to slow, but inflation and prices continue to rise. Energy, of course, central to what's happening in the UK, given the petrol shortages that do continue. The CAC 100 is looking prettier, up 0.7%. Over in Spain, you're seeing gains of 0.7% as well. By the way, French consumer sentiment coming in slightly better yesterday than some of the forecasts had expected. Let's change on then and look at how the sectors are breaking down. You saw a loss of almost 5% across the technology space yesterday here in Europe. Again, it's the yield story, it's valuations, and Francine has been underscoring this for us. The energy sectors right now here in Europe are down 0.7%. The prices have come off slightly from those record highs that we saw yesterday. Utilities are gaining 0.3%. You've got stocks in terms of the banks up 0.9%, benefiting from the higher yields. We had that call from our guest at Barclays in the previous hour, says that he likes banks on the back of those higher yields. Technology gaining 0.2%, picking up just marginally some of the losses, not nearly making up for the almost 5% drop that we saw across the sector yesterday. Francine.
Yeah, Tom's European equity markets opening a little bit higher. That comes after what you were saying, the big sell-off yesterday with the Nasdaq falling the most since March. Now, the sell-off was actually catalyzed by rising Treasury yields, and Congress continues to stall on raising the debt limit. So at a Senate hearing yesterday, Janet Yellen warned that the U.S. default would be catastrophic.
It is imperative that Congress address the debt limit. If not, our current estimate is that Treasury will likely exhaust its extraordinary measures by October 18th. America would default for the first time in history. The full faith and credit of the United States would be impaired, and our country would likely face a financial crisis and economic recession as a result.
Well, Jay Powell said that the Fed was likely to begin cutting its asset purchases soon, but a rate hike was not on the near-term horizon.
Your record gives me grave concern. Over and over, you have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed, and it's why I will oppose your renomination.
Let's bring in our chief Asia economics correspondent, Enda Curran, for the very latest. Enda, if you look at, first of all, the warnings from Janet Yellen and Powell on the debt ceiling, in the past, it was always to the wire. Maybe sometimes they defaulted for a couple of days, but then they sorted it out. Is this time any different?
Well, look, it's a very striking warning, Francine. The time frame that Ms. Yellen has outlined is shorter than most people expected as well, roughly talking about 3 weeks before the US runs out of money. I mean, obviously the expectation would be that there's a kick the can down the road and that there's a fudge agreement at some point, but nonetheless, even after Secretary Yellen spoke, in fact, Republican lawmakers doubled down on their opposition to any kind of agreement with the Democrats on either suspending the debt ceiling or lifting it. So it doesn't look like there's any kind of a political resolution at the moment. And of course, the longer this drags on, then the longer the greater the sense of uncertainty and volatility that will follow on from that and flow into global markets. So, just as supply chains and energy prices are catching everyone's attention now, I think the US debt ceiling will come into a sharper focus over coming weeks too.
And how much damage it has been done to Jay Powell by this criticism from Elizabeth Warren on the question of banking regulation?
It's certainly a very blunt hit against the Fed chair. You'd have to say, when you have a senator of Senator Warren standing, accusing him of basically stoking up financial imbalances and a future financial crisis. That's obviously not what the Fed wants to be accused of. But more practically, though, it also shows that there is a political wing now against the reappointment of Jay Powell. That will pressure President Biden when it comes to his decision. Who does he put in there? He needs to keep that side of the Democratic Party on his side, of course, for his broader economic agenda. So if he doubles down with Powell, he risks losing that. Then the question becomes, whoever does get it, what happens? U.S. monetary policy, what direction does it take? Does it take a different direction at all? And that's why this decision and these U.S. Fed politics will become very central now for central bankers everywhere, because what happens at the Fed matters for everyone. So there's going to be a lot of attention on how the Fed reappointment process does play out over the months ahead also.
Okay, Enda Curran, Chief Asia Economics Correspondent, joining us out of Hong Kong for the latest on the politics in Washington and the fate of Jay Powell. Okay, joining us now to talk more on the markets is Randy Summel, M&G Portfolio Manager. Randy, we're seeing a little bit of a turnaround in the European session just in the first few minutes. Of course, technology has been in focus given the sell-off and the concerns about yields, but the politics of Washington are also becoming more squarely in focus. Do they concern you? Are now the risks around the politics in DC are being priced into these markets?
Yeah. I mean, good morning, Tom. Good morning, Francine. I mean, to begin with, oil has come off about 1.5%, both European Brent and WTI. So I think that's giving the market some pause to show that these energy markets are not purely out of control. Gas futures are also coming down, again, quite a positive, especially for Europe, where we've seen them go up. Now, the issues in Washington are going to be over us for some time. It's another 19 days before the US runs out of money. We've been here before, but unfortunately it's a confluence of all of these events, and they are playing politics. I think the Republicans simply don't want to put through Biden's $3.5 trillion stimulus package, so they're using this as an anchor to try and get some leverage in the negotiations. I mean, just a reminder that Democrats hold both the presidency and both branches of government, but it requires 60 senators to pass the budget.
But Randy, overall, so how much more of a correction are you expecting in equity stocks?
No, I mean, it's going to be hanging over us. It's predominantly going to be in the US. I can't see it playing a huge factor. Like I said, we've been here many times before when President Obama was in power at the same time. The overhang is there. Markets have risen up until this point. But longer term, they usually find a resolution, and I suspect that they will again this time.
Okay, Randy, where do you stand in terms of this rotation from growth to value? How sustained can it be given the monetary policy support that continues, even as we look at a taper that's being brought forward?
Yeah, I mean, we've had these bursts before. We go back to February, March of earlier this year. Inflation concerns rose, the mid-end of the rate curve rose again. It's a question of whether it's likely to be sustained. The ECB, the Bank of England, the Fed do not believe inflation is a longer term. It's not structural. Catherine Main of the Bank of England policymaker yesterday said it's transitory and not troubling. I suspect we still need to get through this process where furlough programs end, some of the stimulus packages come off, the Fed and Bank of England stimulus comes down. Only then will we get a truer picture of where inflation is. And we need some of these supply bottlenecks that have been caused by COVID to come out. We continue to anniversary very low inflation numbers from last year. So we're only likely to get a much more truer picture next year.
So, Randeep, what are you buying at the moment? Do you go heavy into gold or cash?
I mean, gold's never been a great investment, to be quite frank, over any long-term period of time, especially the equities. It's a bit different when you own the bullion. In terms of equities, I mean, we're coming up to COP26. The green agenda is going to be on full display. Governments have been accused of not doing enough. More capital is going to be put there over the course of the last month before they meet on the 1st of November. I still think that is a good place to be longer term. This is a 3-decade tailwind that we're likely to see.
Okay, Randy, what about hedging? What are you buying to hedge?
No, I mean, a diversified fund tends to generally hedge itself. Some of the value stocks, some of the reopening trades have come off again. Delta fears have caused concerns around that. I mean, if we just look in the UK now, Rolls-Royce has started to come back, long-haul travel, especially with the US reopening, Wizz Air bidding for EasyJet. It gives you an idea that the market is, first of all, rationalizing, and second of all, sees a huge opportunity in terms of where valuations are today. A few more of these reopening trades, I think, once we get through this winter, are likely to come very positive next year.
All right, Randeep, thank you so much for joining us. Randeep Somel, their M&G portfolio manager. Now, coming up, China considers raising power prices for industrial consumers to help ease a growing supply crunch as power shortages threaten growth. So we'll have plenty more on that story shortly. And this is Bloomberg.
Can come together, what the world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. 12 minutes into the European trading day. And actually, we're holding on to gains across the board. There was a little bit of concern that after the sell-off that we saw yesterday, the biggest sell-off in the U.S. market since March, it would translate into Asia, and then it would translate into Europe. Actually, for the moment, Europe is holding strong with the Euro Stock 600 getting some 0.7%, but look out for technology stocks, a little bit of pressure there because of valuations. Now, let's also take a look at what's on the move this morning. I start with ASML, Tom. I mean, this goes back to what we've been talking about the chip supply crunch, and this was one of the biggest things that we've been, of course, talking about. ASML, though, today raising its sales guidance for coming years, as they say chip makers are rushing to fill the supply shortage by ordering more of its machines that make the semiconductors. I mean, despite this encouraging news, because of the pressures and the delays, ASML down 0.4%.
Okay, and in the M&A space, you're looking at Morrison's, of course, the supermarket chain here in the UK. There's been this battle within the private equity industry in terms of takeover bids for this company between CD&R and Fortress. You have now the UK's takeover panel laying out the procedure, the auction procedure for these bids. It's going to consist of a maximum of 5 rounds. October the 19th, by the way, is when Morrison's has set itself the deadline for its shareholders to vote on at least CD&R's proposal, currently gaining just 0.2%, Fran.
Let's also look at Next. Now, this is the fashion retailer, affordable fashion. I have to say it's very popular with Gen Z, millennials, and even boomers, I'm told. Next actually raising its profit forecast for the 4th time after we saw a sales surge. Consumers really returning to the stores after lockdown, and also they stayed in the UK for British summers, which apparently gave Next a bit of a lift as people rushed to buy their caftans or bikini. I'm not sure what you wear actually at the British Bee. I feel like you still need to wear parkas.
Do people still wear caftans?
White Next on the Riviera, on the Italian Riviera.
Yeah.
I'm not sure in Bournemouth how many caftans you wear, but Next gaining some 2.9%. Let's get, save us, Laura. Let's get straight to the Bloomberg Business Flash with Laura Wright. Hi, Laura.
Hi, Francine. China has stepped in to buy a stake in a struggling regional bank from Evergrande as it seeks to limit contagion from the embattled property developer. Evergrande is offloading a 20% stake in Shenzhen Bank to the local Shenyang government for just over $1.5 billion. According to a Hong Kong Stock Exchange statement, all proceeds will go to settle debts with the lender, leaving nothing more for bondholders. Total Energies says the gas crisis that's affecting Europe is likely to last all winter, with stockpiles lower than usual at the start of autumn. In an exclusive interview with Bloomberg Television, the CEO of the French energy giant warns high prices could see countries may restart coal and oil-fired power plants. Deutsche Bank plans to bring 5,000 staff back to New York City over the next 6 months and expects offices in major financial hubs to refill quickly. America's CEO Christina Riley told Bloomberg that many returning employees will have the option of flexible arrangements. Deutsche Bank said earlier this month that workers in many industries are feeling isolated. And Bond is back. Daniel Craig's final film as a 007 No Time to Die finally premiered in London last night after 3 postponements due to the pandemic. Shares in Cineworld and Everyman traded higher this week on reports that pre-sales for the film are set to be the highest since summer 2019. Bond fans have had to wait 18 months for the film, the 25th in the long-running franchise. Tom, Francine, what did you think about Daniel Craig's pink blazer?
Well, I was just about to say, Laura, you've clearly taken some cues from Daniel Craig because you are aligned with him on the fashion front, which is lovely. Daniel Craig, I'm not sure if he pulls it off quite as well as you, but it's his last film, so we should give him some breathing room, at least, to bust out the pink blazer.
I vote for Tom McKenzie in a pink velvet tomorrow on the air, and if it doesn't happen, I'll be very disappointed.
Daniel Craig can pull it off. I'm not sure I'm at that level.
You can pull it off better.
But maybe we'll give it a spin. Laura Wright in the pink. Thank you very much. Indeed, switching from Bond to energy. The energy crisis in Europe, of course, rearing its head in China. This is a major story, sitting at the crossroads of a vast global energy transition. Here is what some of the energy CEOs on Bloomberg TV this week had to say.
This is just the first inning of a multi-year, potentially decade-long commodity supercycle. It's driven by, we have the war on climate change.
It should be a wake-up call to really speed up the transition towards a fully sustainable economy.
What we need to do is invest more in renewables.
We'd love more batteries to be stored in the UK.
If electricity prices drop, you simply produce more and store it. If electricity prices rise, you simply take it out of storage. So that's really what we're missing right now.
Now, we also spoke to Total Energy chief executive, who said he does not see the gas price surge pairing anytime soon.
I think it will go through winter because honestly, it's the first time that we see such high prices in summertime. It's very unusual. It did not start from Europe. It started from China. Very huge Chinese demand during the first half, an increase of 35% of LNG demand in China compared to 2019. So all the LNG from the US went to Asia because of better price. So it's, of course, it lifts the prices in Europe. Inventories are low, so entering into wintertime with low inventories obviously is not a good idea. So it all depends about the meteor.
Okay, for more, we're joined by Bloomberg's Helen Robertson. Helen, we had the views there of some of the chief executives around what's happening in the energy space. When it comes to the question of oil, we saw it above $80 yesterday. It's come off a little bit in today's session. Do we expect the oil prices to remain elevated given these supply crunches? Okay, it doesn't seem like we have a connection with Helen Robinson. We'll try and re-establish that for you. Some technical problems here, but we, of course, know, Francine, that the consensus seems to be, and we heard that from the CEOs, that energy prices will remain elevated. Total Energy CEO saying at least until this winter. And that's when a lot of policymakers have been saying just how deep the winter gets in terms of those temperature drops will be crucial to the supply picture. And we know that Nord Stream 2 is coming on in terms of LNG. The timeline is a little in flux for that, but likely not before this winter.
All right. Twice lucky. I mean, it's third time lucky, but we're gonna do it in the second time. Helen, can you hear us? I hope we can hear you.
Hello. Yes, I can.
Hi, Helen. So we were talking a little bit, and we were asking you actually about the supply crunch. You know, worldwide, will it get better, or actually does it need to get worse before then start stabilizing?
Hi there. I hope you can hear me. Yes, I mean, in terms of gas, obviously, we can see what's been happening in Europe over the past few weeks. We've seen prices just soar to absolutely record highs. In terms of sort of the question earlier about oil as well, obviously what we've been seeing is that analysts have essentially been forecasting that prices are going to just keep rising towards the end of the year. And that's to do with all sorts of things. The fact that obviously, you know, sort of the global economy is now coming out of its sort of consumption lull due to obviously, you know, sort of stay-at-home measures that were put in place during the pandemic. As I said, obviously mobility is improving, and it's also the action that OPEC Plus has taken as well. So as we know, there's a key meeting that's happening next week. So the group has committed to increasing oil production by another 400,000 barrels a day as of next month. So it'll be really fascinating to see whether they look at revising that advice and increasing output even further.
Yeah, how comfortable are OPEC Plus with the current price levels? October the 4th is that meeting. Bloomberg's Helen Robertson, thank you very much indeed. Okay, coming up, chip makers are under pressure after Micron delivers a disappointing forecast. More on the details of that story, the implications for this broader chip space. This is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港易嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧。係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
When you went to Harvard Law School, did you say, maybe someday I'll be on the Supreme Court.
Anybody who thinks maybe someday I'll be on the Supreme Court, I don't want to say there's something wrong with him, but there is something wrong.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
How did you make the decision to move to the Bahamas of all the options out there?
We've been looking at the Bahamas for a while. They're one of the first countries to roll out any comprehensive regulation for cryptocurrencies, which we think is extremely important for the space and a really positive sign.
Okay, buy the dip, maybe back. You're seeing the stocks, Europe 600 gaining about 1% currently. Some solid gains across the CAC and the DAX as well. Brushing off the concerns that we saw filtering through the markets yesterday around yields, around inflation, around the pace of reducing support. This is the picture, of course, 23 minutes into the trading day. Let's focus on one of the corporate stories, though, and concerns there. Micron falling in late trading yesterday after slowing demand from PC makers hurt its forecast. The largest US memory chip manufacturer expects sales to be about $7.65 billion in the period ending in November. That's some $900 million less than forecast. Micron's slide has fed through to other memory chip makers in South Korea and Japan today. Joining us now is Bloomberg's tech reporter, Debbie Wu. Debbie, why did Micron's forecast disappoint so substantially?
So CEO Sanjay Mehrotra said that there is a slowing of orders from PC makers, but it's not because of weakening demand per se. It's more because some of these PC makers are struggling to get other types of components and chips, meaning that these PC makers cannot build all of the laptops and desktops that they that have been ordered. Mehrotra suggested that this is a short-term issue, though, and then he said that the situation will reverse when industry-wide shortages ease in the coming months.
So, Debbie, how is Micron's forecast actually impacting stocks of peers in other regions? Like, is it actually, are we having a repricing across the board?
Right, so we have seen Asian memory chip makers for today. South Korea's SK Hynix fell as much as 3.4% in the early trading session, and Samsung fell 2.9%. And we have also seen some industry equipment and material supplies fall, including Japan's Advantest dropped as much as 5.6% earlier this morning.
Debbie, just recap where we stand in terms of the global chip shortage then and what the demand situation is currently looking like.
So actually, we are still seeing a pretty strong chip demand all around, and the tight supply of chips is still likely to persist for at least another 2 to 3 quarters to come. AMD CEO Lisa Su said yesterday that demand for semiconductors haven't cooled off, and a tight supply of the crucial electronic components will likely last into the first half of 2022. And auto chip maker Renesas also said this morning that they are seeing orders for next year filling up very quickly, and they are not sure that they will be able to meet all the demand next year.
All right, thank you so much. Our Bloomberg technology reporter there, Debbie Wu, with the very latest on ASML and some of their peers. Coming up, we hear exclusively from the Total Energy chief executive, Patrick Pouyanné, on the global energy crunch. He was in conversation with Caroline Conan in Paris, an interesting conversation on actually where he's expecting and when he's expecting things to stabilize. He says things are probably not going to get better before the end of the winter. This is Bloomberg.
The electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose for this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are our top stories. Catastrophe in waiting. Jay Powell and Janet Yellen warned that a U.S. default due to a failure to raise a debt ceiling would have disastrous consequences. A dangerous man, Elizabeth Warren, slams the Fed chair over his record on financial regulation, saying she will oppose his renomination. And TotalEnergies chief executive tells Bloomberg that the energy crisis could last until winter. We'll hear from our exclusive interview throughout the program. Of course, it's all about markets after we saw that pretty big sell-off in the U.S. actually holding strong in Europe, Tom.
Yeah, biggest drop, of course, since May for U.S. equities. But as we were talking to Barclays European strategist Emmanuel Carr, he was saying, look, this is part of the mid-cycle moves that we're seeing in terms of the choppiness. So a heavy day of selling yesterday, followed by gains today. Buying the dip is maybe the mantra that's back. Once again, although Bank of America, by the way, warning that this everything and always up scenario is just building up risks for further along. Today, though, at least 30 minutes into the trading session, things are positive. Gains of 1% across the Europe Stock 600. You're looking at the DAX gaining close to 1%, 150 points on the German index there. The CAC 40 is gaining 1% as well. And here in the UK, the Prime Minister saying that some of the concerns around petrol shortages are starting to ease. We'll see if the army and the military is put to play to try and continue to relieve those measures. In terms of what's happening on a sector-by-sector basis, it's healthcare that's top of the list, gaining 1.6%. Tech was a heavy sell yesterday, down almost 5%, currently gaining just over 1% in terms of technology. At the bottom of the list is energy. Some of the energy prices coming off slightly from those record highs, so you're seeing that reflected in the energy sector, down around 1%. That is the state of play around 30 minutes into the trading session here in Europe. Francine.
So, Tom, as the energy crunch goes global, the chief executive of French major TotalEnergies says the surge in gas prices could last through the entire winter, although he doesn't fear shortages in Europe. Patrick Pouyanné also spoke to Caroline Conant about the transition to renewable energy.
I think it will go through winter because, honestly, it's the first time that we see such high prices in summertime. It's very unusual. It didn't start from Europe. It started from China. Very huge Chinese demand during the first half, an increase of 35% of LNG demand in China compared to 2019. So all the LNG from the US went to Asia because of better price. So it's, of course, it lifts the prices in Europe. Inventories are low, so entering into winter time with low inventories obviously is not a good idea. So it all depends about the meteo. I don't know. So it's why answering to your first question of the hike, future hike, we don't know. It's either we have a mild winter or not. But it's clear that we are facing such an unusual situation, which means, by the way, that it's also the proof that natural gas has a role to play in the energy transition, you know, and this is why Chinese demand is so high.
So this will last until when? March 2022?
It's difficult to know. I mean, I'm not, but winter, it's March, April, but again, we don't see what really could be the alternative to that. So it will depend again on the temperatures during winter time. So I'm not Mrs. Meteo. I don't expect some shortage of gas. I think the question, of course, will be if it's going too high, then you could see some strange move. The UK thinking to restart some coal-fired power plants. Even some countries are speaking about fuel-fired power plants, which would be not good at all for climate change, you know.
What do you think OPEC Plus can do in order to limit this increase in prices for the rest of the year?
What they could do, of course, is produce more. The other source of higher production, by the way, will be the U.S. shale oil, you know, because obviously you have players which have been also very prudent. It has been a surprise. I think that at $80 per barrel, maybe some of them with less cautious will restart some wells, and then you could see again, but all that is a little delay. So we have entered into, I would say, a cycle of high prices, lower investments. Generally, in the oil business, when prices are so high, people begin to invest more, and then you create a new cycle. So
you think the cycle will go through the winter as well, or will go longer?
Yeah, it might. It's possible. Honestly, I will tell you, honestly, I would, in February, this interview last February, I would have never bet that we would be at such high prices, you know. So, I mean, what is true on oil is that you have a global dynamic which is not in favor of investment, you know. Climate change, in particular in Western companies, you know, we are investing less in oil and we are putting more money in renewables as Total Energies, you know. So you have this trend does not incentivize people to rush. I think in the shale oil in the US also you have some consolidation, many players buying others. So less players, so probably less investments, more discipline, I would say, in the oil market. The question again will be how long will it take for people to forget?
Okay, that was Patrick Pouyanné, Total Energy CEO, speaking exclusively to Bloomberg in Paris following the company's Investor Day. Okay, switching focus to technology now. The London Technology Club is to launch a $50 million fintech fund next year. This comes after the members-only investing group claimed some standout successes in the sector, with one investment gaining 500%. In July, the group raised $800 million from investors, including SoftBank and Tiger Global Management. We are very pleased to say we're joined now on set by Konstantin Sidorov, founder and CEO of the London Technology Club. Konstantin, thank you for joining us on set. So you've raised this $50 million. We talked about some of your successes, early investments in the likes of Spotify and Lyft, many others in your portfolio. What is the aim around this $50 million that you've raised? How are you going to put that to play?
Actually, we didn't raise it yet. It's our plan for 2022, and it will be our third fund. Our first fund was we started it last year. This year we raised more than 31, and next year the plan is above 50.
Okay. What will you be looking to pull the trigger on with that deployment of cash?
Fintech is one of our priorities, but we are sector agnostic. So we love mobility. I'm very bullish about AI because AI behind of all technology sectors, what we see now.
Okay, where are you looking regionally? Is the UK rich pickings for some of these areas, or are you looking beyond the boundaries of the UK? How globally are you looking to deploy these funds?
We are looking for the US, of course, and this is our major investments. About 60% of our investments are in the US company, and then, of course, UK, Europe, but we also look for all over the world opportunities. Okay. Because, for example, now we're considering one investment in India.
How many deals do you expect to be closing by the end of the year?
More than 25, but we are not about number of deals. We're more about quality of the deals, and that's the most important thing, what we're looking for.
We talked about the fact that obviously you were early on Revolut, and that's seen a lot of success at that company in changing the fintech environment here, the number of users. Are you planning to expand your holdings of that company? How are you looking at that investment?
I'm very optimistic about fintech in general and in Revolut in particular, and we're going to hold our shares. because I believe in the company and I believe in fintech, because there are so many things to disrupt in very traditional financial and banking sector. So I believe in it.
I have to ask you about mobility. You touched on this, and your investment in DD is what comes to mind. Do you still hold that investment in that company, given the travails around DD and its investment, its IPO in the US?
DD is my personal investments, and I hold it. What else the investor should do?
You're
Chinese.
You're a brave man, yeah. Does it make you rethink investments in China?
Oh, I was quite careful before to invest into China, so it's just very, very small part of my stock. But still, I'm quite optimistic in terms of technology sector, especially technology sector in China, because my opinion that it's underestimated.
Okay, what are you looking at? Are you in any way attracted to what's happening in the crypto space? And if so, where within that ecosystem would you be looking?
I'm a big fan of arbitrage strategy. So I did not invest into any particular cryptocurrency, but arbitrage is, I think, that's where we have a lot of possibility due to a lot of volatility in the market. So that's why I like arbitrage.
Okay, your investors, they're high net worth individuals, they're family offices. What sense do you get from them as to their appetite? How much liquidity are they prepared to put to play? How much cash do they currently have on the sidelines? What is the mood amongst your clients at this point?
The combined wealth of LTC, London Technology Club members, private members, is about 20 billion. And I don't see any changes in their behavior. So we still have a lot of liquidity in the market, and there are a lot of liquidity through our members.
Okay, Konstantin Sidorov, thank you very much indeed. You've raised $33 million US this year, aiming for 50 million next year with an eye on AI and fintech, the London Technology Club. Thank you very much for joining us. Okay, coming up, after Kaplan and Rosengren quit over the trading scandal, will the Fed be forced to review its rules? We'll discuss that next. This is Bloomberg.
Bloomberg surveillance to stay on top of the latest market trends, commodity trends, and fashion trends.
Are you going out for a fitting on a base suit?
I'm going to go and get a base suit. The crowdfund was very profitable.
$100,000.
About 100K, which is what it would take for me to wear that suit on this network. How do you get that bulky fit? I'll find out. I'll have a chat.
You get bulky,
I get the
John.
bulky one.
You know, on the channel in the present.
Look at those markets.
Don't taper the pants.
John, you
futures
look
down
so
6.
good in a beige suit.
Keep
dreaming.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the Open, 43 minutes into the European trading day, and actually we're holding on to gains. Tom, there was, I guess, questions about whether we would follow Asia lower because of what we saw in the U.S., repricing, of course, inflation expectations, and those pretty dire warnings about the debt ceiling from Jay Powell and Janet Yellen. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Fumio Kishida is set to become Japan's prime minister after the ex-foreign minister overcame popular reformer Taro Kono to win leadership of the country's ruling party. Kishida will likely be appointed on Monday to succeed outgoing Prime Minister Yoshihide Suga, putting him in charge of the world's third largest economy. The self-effacing former banker has promised tens of trillions of yen in extra government spending. U.S. Senator Elizabeth Warren says she won't support Jerome Powell for a second term as Fed chair, labeling him as dangerous over his record on banking regulation. She's the highest profile Democrat with a say on Powell's confirmation to come out against him. Powell has bipartisan Senate support and is likely to be confirmed again if President Biden picks him after this term expires in February.
Your record gives me grave concern. Over and over, you have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed, and it's why I will oppose your renomination.
Democrat progressives in the U.S. House are lining up to defy Speaker Nancy Pelosi and oppose a bipartisan infrastructure bill. It's a blow to the $550 billion measure's chances and potentially endangers President Biden's economic agenda. The infrastructure bill has already passed the Senate, but liberals in the House insist that Democrats pass a larger tax and social spending package before voting on the roads and bridges measures. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine, Tom.
Laura, thanks so much. Laura Wright in London. Now, a few positions in the world have more sway over the movement of markets than, of course, a seat at the Fed. It's where American monetary policy is set, from which virtually every asset in the market actually takes its cue. Two Fed presidents resigned this week after disclosing their trading activity last year. Now, while no rules were broken, it's drawn intense criticism and raised ethical questions. How can policymakers with unparalleled influence over the financial markets be permitted to actively trade? Well, for more on this, we're joined by Simon Kennedy, Bloomberg's executive editor for economics. Simon, of course, the bigger also question is what we heard from Elizabeth Warren saying that actually Jay Powell is dangerous and she will try and block him. Does that actually influence? So the term of Jay Powell ends in February next year. What can we expect?
So the odds of economists and the kind of market watchers are that Jay Powell will get renominated for a second term by President Biden. But obviously there are some on in the progressive side of the Democratic Party, led perhaps by Senator Elizabeth Warren, that want him to consider other candidates. One of those would probably be Lael Brainard, who's currently on the Fed board, and very emotive language yesterday from Senator Warren, calling Jay Powell a dangerous man for his record on bank regulation. So it certainly clouds the outlook a little. But it is important to note that were he to be nominated, he would likely get considerable bipartisan support. He is a Republican, and the question for some Democrats is why would Joe Biden want to nominate a Republican? But remember, until Donald Trump, that was the tradition. You kind of looked away from politics when appointing your Fed chairman.
Simon, to what extent does the trading scandal around Rosengren and Kaplan damage Jay Powell's chances, or does the fact that they resigned nip this in the bud?
I don't think it necessarily affects Jay Powell's nomination, but I think it puts a lot of questions around the Federal Reserve. And obviously, Powell speaking last week was saying that the current way of monitoring trading is not adequate. Again, as he said earlier in the conversation, neither Rosengren nor Kaplan have done anything wrong or broken any rules. But it certainly looks slightly questionable when you're when you're a central bank working very hard to protect, to maintain your representing Main Street as much as Wall Street, when you're hard at work trying to stimulate the economy, for two of your officials also to be participating in trading and trading quite substantial sums of money. And so while they've not done anything wrong and it's within the rules, Jerome Powell last week talking about how those rules need to be looked at, and certainly that's part of the challenge for him or whoever replaces him as the Fed goes forward. It certainly wants to be a bit less opaque.
So I'm confused when Elizabeth Warren says that Jay Powell is dangerous. Is she just saying that he's helping banks too much and therefore there's taking too much risk? And do we have any indication if there's going to be more democratic voices like that, and actually if there's someone that she would put in place that wouldn't be seen as dangerous for the markets?
So her record, she came into elected office as someone who'd spoken out amid the 2008 financial crisis, and then the accusations yesterday leveled at Jerome Powell were that his financial regulatory record since has loosened restrictions on banks and leaves the whole economy at the risk of another financial crisis. Powell pushed back, obviously, said he would look at areas that she had concerns about and that banks were better capitalized now than they were in 2008. It's worth noting that we had the deepest recession in many decades last year. Banks seem to have pulled through that. But certainly she's concerned. She's raised these issues before. As to whether she has an alternative candidate, she didn't reveal one yesterday. The assumption would be that Lael Brainard, currently at the Fed, would be a more appealing chairperson for, as far as she's concerned. Brainard has, on a repeated occasion, pushed back against some of the regulatory relaxation that Powell has signed off on, along with Randy Quarles, who's the number 2 official at the Fed for regulations.
Okay.
So this is a part of a trend for Elizabeth Warren. Other Democrats, there are a couple of other Democrats who have yet to indicate where they stand on Powell, so they'll be closely monitored.
Okay, Simon Kennedy, our executive editor for economics. Thank you very much indeed. Coming up, European stocks are trading higher after sell-offs in the US and Asia. We'll dig back into the market conversation, bringing the latest. That is next. This is Bloomberg.
every Friday with 30 minutes dedicated to fixed income. I'm Jonathan Ferro. This is Bloomberg Real Yield.
Okay, welcome back to the Open. 53 minutes into the European trading day. The concerns about higher yields starting to ebb somewhat today. You can see the session is positive here in the first 53 minutes of trade. Very different picture to yesterday, of course. Gains of more than 1% on the Stocks Europe 600. And you can see there across the board, really, Europe is positive again as some of these concerns take a backseat, at least for now. Let's take a look at some of the stories we are following today. We start with the EU at 10 a.m. UK time. Eurozone consumer confidence survey results are due to be released. Yesterday, you got France coming in better than expected. Then later today, it's US housing data. Mortgage applications and pending home sales will give us a snapshot of what is a red-hot market, Francine, over in the US.
Yeah, and it's, you know, the one thing that we need to watch out is basically what happens in the U.S. after the sell-off yesterday. Now, I don't know whether the debt ceiling is really something that will focus investors' minds. Again, in the past, they kind of always sorted it, but it does seem that Jay Powell and Janet Yellen are taking it very, very seriously. Now, this afternoon, Russian CPI is also due to be released. It's day 2 of the ECB forum, where central bank chiefs Andrew Bailey, Haruhiko Kuroda of Japan, and Christine Lagarde, and also Jay Powell will be speaking. So maybe they give us an indication of exactly how they expect inflation to play out, or they talk about this repricing in treasuries. Now, the sell-off in the U.S. and Asia has not followed through to Europe, with stocks trading higher this morning. The rout in bonds is also easing, with treasury yields slightly lower. So let's dig into the markets with our Noor Alali from Markets Live team. Noor, always great to speak to you. I mean, the repricing and actually the change in bonds, not only treasuries but across the world, is continuing.
Yeah, absolutely. I mean, you've got these inflation concerns creeping back in, definitely a lot more high in Europe, with the energy crunch having its bigger impact on supplies here versus the United States, where you can see that move being driven a little bit more by the hawkish Fed here. But all these factors coming in together are yielding that higher yields that we've seen in the last week.
Noor, how should we be thinking about Evergrande? Is this a risk that can be put to some extent to one side? We've seen them selling off some assets in the banking space today.
Yeah, and they've got a payment that's due today for their dollar bonds as well, so you've got that concern as well. But realistically, I think the PBOC and the Chinese government have come out and said they're watching the property market quite closely. I don't anticipate this to be that Lehman moment that a lot of people have been touting. I do think that the Chinese government has a little bit more, has a lot more capacity than we think. But we, as developed markets, are quite comfortable with that bed of liquidity since the financial crisis from central bankers. So that action from the China is quite shocking to us when there's inaction from there.
Is there, Nora, someone that you're expecting to maybe, change how we look at inflation? Like, who would move first on inflation expectations?
I was going to say the BOE, but then yesterday the comments that came out from the central bank governor and also the lead policymaker, did show that they still see inflation as transitory, and they may not act at supply shocks that impact, that won't impact larger economies. I still think, though, that emerging markets are leading that curve with inflation, with raising rates, because inflation hits there a lot harder than developed markets.
Okay, thank you very much indeed. Noor Alali from our M Live team breaking down the market moves and what to look for in terms of catalysts, Francine.
Yeah, so we'll continue, of course, looking at the markets. We'll look at oil also sinking, and we're seeing U.S. stockpiles of oil climb. That's it for the European Market Open Surveillance Early Edition. Next.
companies that can move the fastest and be the most agile, no matter what change comes their way, no matter how fast it comes their way, these are the ones that are going to survive and thrive. China's a good example of that now. You see across the board some of the rules and regulations that are changing, or maybe the uncertainty that's coming out of the Chinese government, and they're trying to deal with some of the local challenges that they have, both in terms of how to manage the asymmetry between the haves and the have-nots locally. They're trying to deal with the issues of managing data and security and other aspects like that. The companies that can operate in China and around the world collectively in a bipolar way are going to be the ones that come out of this on top.
Are investors going to come out on top, though, or are companies looking to do business within China from the United States, are they going to come out on top at the moment, Bob?
Yeah, it's clear that the investors are in for what I think is going to be a bumpy ride. You see it today in terms of what's happening in the marketplace.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Or U.S. Open tennis champion Emma Raducanu's 3 dream dinner guests.
Daniel Ricciardo, Michael Jordan, and Tom Keane from Bloomberg.
She understands you.
Funny and very understandable.
I am reading in on tennis like nobody.
Yeah.
Champion approved Bloomberg surveillance. Mornings on Bloomberg Television and Radio.
It is imperative that Congress address the debt limit.
We had set a test for beginning to taper. We've all but met it on the path that we're looking at.
You have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Jay Powell and Janet Yellen warn of a catastrophe in waiting. They actually tell Congress that failure to raise the debt ceiling would bring a disastrous U.S. default. A dangerous man, Democrat Senator Elizabeth Warren openly opposes Jay Powell's renomination. And TotalEnergies chief executive tells Bloomberg that energy crisis could last until winter. We'll hear from our exclusive interview throughout the program. So first thing is first, so let's quickly check on the markets. Yesterday we had quite a big sell-off in the U.S. Not so. Things are stabilizing in Europe. I don't know for how long, but the focus is definitely on Treasury yields, which are also stabilizing. Again, the concern came from stagflation. So I think there are probably two things that actually freaked out the market. First, stagflation concerns, which is when GDP doesn't really go anywhere, but inflation is rampant. And that led to a repricing in Fed expectations, led to repricing Treasuries hitting the equity market. Currently 15115, and then you can see the S&P futures also gaining a touch. I think things are looking up. Also a bit of concern on the debt ceiling, and people are saying, well, look, if you look at valuations, maybe it's time to sell some of the lofty valued stocks up, but you can still hold on to the rest. The DAX, the FTSE here in the UK and the CAC all gaining 1%, and some of the groups are actually moving the most. I think chips still under pressure, but ASML coming out with some better than expected forecast. So Jay Powell, Janet Yellen used their congressional testimonies to warn of catastrophe if the U.S. fails to raise the debt ceiling. Yellen said the Treasury will run out of cash on October 18th if Congress does not act.
It is imperative that Congress address the debt limit. If not, our current estimate is the Treasury will likely exhaust its extraordinary measures by October 18th. America would default for the first time in history. The full faith and credit of the United States would be impaired, and our country would likely face a financial crisis and economic recession as a result.
Well, the Democratic Party remains at odds also on Joe Biden's agenda, from tax and spending to Federal Reserve nominations. Progressive Senator Elizabeth Warren spoke out openly to oppose another Powell term at the Fed.
Your record gives me grave concern. Over and over, you have acted to make our banking system less safe, And that makes you a dangerous man to head up the Fed, and it's why I will oppose your renomination.
Well, joining us now is Bloomberg's DC morning editor, Kathleen Hunter. Kathleen, great to speak to you. How worried should markets actually be about Democrats delinking the debt ceiling from the must-pass government funding bill?
So, Francine, we're about 2 days out from the government running out of funding, and that is something that the Democrats wanted to package, is a continuation of government funding with this debt ceiling increase that the administration, Janet Yellen and others have been calling for. That was voted down in the Senate, and so now Democrats are realizing that they're not going to be able to move those things in tandem. And the problem is they don't really have a plan B yet for raising the debt ceiling. What they're looking at doing is a very cumbersome budgetary process that might take some time in the Senate. And, you know, we all know if we look at the calendar that we're just a little bit over 3 weeks out from October 18th. So that doesn't give Congress a lot of time to act. And so I guess this is a long-winded way of me saying that markets should be getting a little bit more concerned. You know, Congress does tend to work in a last-minute basis where they tend to pass things, you know, at the 11th hour and come together and do things. The fact that Republicans have been staunchly against raising the debt ceiling as part of a spending bill, and it's unlikely that they're going to support any kind of debt limit increase at this stage, means that Democrats are likely going to have to do it with Democratic votes alone, and that could be a time-consuming process, and it's unclear how they're going to get there in the time that they have.
So, Kathleen, what are the political implications of Democrats raising the debt ceiling without any Republican vote?
Well, so Mitch McConnell, the Republican leader in the Senate, has been very adamant that Republicans won't vote in favor of a debt limit increase as long as Democrats are simultaneously pushing forward with their plans to pass Biden's economic agenda, his Build Back Better and Family Jobs plan. That's obviously something that Democrats are pursuing, and so Democrats are likely going to have to do this on their own. Now, there's a lot of history of bipartisan debt limit increases, even the most controversial one that sparked the only downgrade in U.S. credit in history in 2011, a decade ago. Even that eventually was passed on a bipartisan basis. So McConnell's a little bit out of form here in terms of what's typical, but it looks like he's sticking to his guns. And so what we could end up with is what we're likely to end up with is a Democrat-only passed debt limit increase. And if that does happen, what we're likely to see is Republicans attacking Democrats in the run-up to next November's midterms, the November 2022 midterms, in which both the House and the Senate could be up for grabs. Republicans are looking to take control of the House, perhaps even win the Senate as well. And I think that part of McConnell's play here is that he's trying to tag the debt limit increase along with the potential spending increase along with as part of Joe Biden's economic agenda. He's trying to tag that as something that Democrats themselves are going to have to own, and that's going to play into Republican messaging heading into the midterms.
Kathleen, thanks so much. That was Bloomberg's DC morning editor, Kathleen Hunter. Now we're joined by Rebecca Chesworth, senior equity strategist at State Street. Rebecca, when you look at some of the repricing that we saw in equities, how much does it have to do about political concerns in the U.S. or even, you know, the second term for Jay Powell, and how much is it just like a healthy correction because of inflation expectations?
Well, good morning, Francine, and a great question to start on. I mean, it's certainly very powerful, those video clips that you just shown, and we realise that there's a lot going on to digest. It's very political, this whole debt process, the whole infrastructure bill, and indeed everything that's happening at the central bank in the US, very political process behind that. But actually, I think the driver that we saw yesterday, as you mentioned earlier, was largely inflation-driven, largely debt markets, what's happening to bond yields. But also, if you think back to last week, then we were talking about Evergrande and the Chinese slowdown, that's having an impact. And indeed, the whole tapering process is having its own impact as well. So several things are coming together. But as we see today, with the green on the screen in Europe, a lot of that is now being put into context.
Yeah, but do worries come back, Rebecca? So it's unclear why, you know, these flare-ups happen. Is Europe somehow delinked because of some of the valuations, or could it actually make the brunt if we have a bigger and deeper correction?
Yeah, good question, actually, because there's been all year, investors have been ready to move from the US to Europe. So US was the first to come out of recession, the COVID-inspired recession. It was reopening quicker, but investors knew that at some point they'd have to jump to Europe as the baton got handed over for growth. So Europe is cheaper. It's got a smaller technology sector, a smaller impact of FANG stocks, these big growth stocks, which are going to be impacted more as interest rates rise. So that's another reason. And also, as you say, there is a delinking because it's not quite so political, and many of these concerns causing the volatility are US-based at the moment. But largely, the markets will work in tandem, and a lot of what we're seeing behind the scenes, so eventually we're moving on to a tightening policy agenda that will affect all markets in time.
Rebecca, what do you make of the energy crisis, and how much, second and third term effects could we see from that? I know we'll focus on it a little bit, differently, but is it changing your view on the industries?
Well, I think so. So I think what we've seen from everything we've seen, from sitting in the UK and the natural gas crisis and the petrol station crisis, etc. I think this has taught us that you ignore energy at your peril. And I think what we'd seen over the last couple of years was a lack of investment, lack of returns, and a lot of this is bundled up in the way investors look at the market now. Importantly, ESG and climate change have come to the fore, so they have moved people's minds away from energy and energy supply. But we see that whenever there are constraints that come into place, and you get constrictions like Hurricane Ida, and you get stockpiles being brought down. So what happens is, as you see that supply reduce, you've not seen any new supply really come on, and then you're seeing the demand rising, import together pushes up the oil price. Now, that could be good for one part of the stock market. Clearly, we saw one sector and one sector only rise yesterday, and that was energy. But there are then knock-on effects for other industries that have to cope with those price rises.
Rebecca, thanks so much. Rebecca Chesworth there from State Street stays with us, and we'll talk a lot more about the energy sector. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Later this hour, we'll also speak exclusively to the Central Bank of Ireland Governor and ECB Governing Council member. He's Gabriel Makhlouf. So you can send us your questions on IB Plus TV Go. This is Bloomberg.
What have we learned from this ever-growing crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we've seen many events, right? Maybe in the fintech sector, and education, casino, and property. So I think diversification help you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high yield space in Asia? I mean, how are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle, because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue, is like a buyer strike. Because of the sentiment, the evergreen is hurting the sentiment, and people don't want to buy. And other developer, because they want to get cash.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, as the energy crunch goes global, the chief executive of the French major Total Energy says the surge in gas prices could last through the entire winter, although he doesn't fear shortages in Europe. Patrick Pouyanné also spoke to Bloomberg about the transition to renewable energy.
I think it will go through winter because honestly, it's the first time that we see such high prices in summertime. It's very unusual. It did not start from Europe. It started from China. Very huge Chinese demand during the first half, an increase of 35% of LNG demand in China compared to 2019. So all the LNG from the US went to Asia because of better price. So it's, of course, it lifts the prices in Europe. Inventories are low, so entering into winter time with low inventories obviously is not a good idea. So it all depends about the meteo. I don't know. So it's why answering to your first question of the hike, future hike, we don't know. It's either we have a mild winter or not. But it's clear that we are facing such an unusual situation, which means, by the way, that it's also the proof that natural gas has a role to play in the energy transition, you know, and this is why China's demand is so high.
So this will last until when? March 2022?
It's difficult to know. I mean, I'm not, but winter, it's March, April, but again, we don't see what really could be the alternative to that. So it will depend again on the temperatures during winter time. So I'm not Mrs. Meteo. I don't expect some shortage of gas. I think the question, of course, would be if it's going too high, then you could see some strange move. The UK thinking to restart some coal-fired power plants. Even some countries are speaking about fuel-fired power plants, which would be not good at all for climate change, you know.
What do you think OPEC Plus can do in order to limit this increase in prices for the rest of the year?
What they could do, of course, is produce more. The other source of higher production, by the way, will be the US shale oil, you know, because obviously you have players which have been also very prudent. It has been a surprise. I think that at $80 per barrel, maybe some of them will be less cautious, will restart some wells, and then you could see again, but all that is a little delay. So we have entered into, I would say, a cycle of high prices, lower investments. Generally, in the oil business, when prices are so high, people begin to invest more, and then you create a new cycle. So
you think the cycle will go through the winter as well, or will go longer?
Yeah, it might. It's possible. Honestly, I will tell you, honestly, I would, in February, his interview last February, I would have never bet that we would be at such high prices, you know. So, I mean, what is true on oil is that you have a global dynamic which is not in favor of investment, you know. Climate change, in particular in Western companies, you know, we are investing less in oil and we are putting more money in renewables as Total Energies, you know. So you have this trend does not incentivize people to rush. I think in the shale oil in the US also you have some consolidation, many players buying others. So less players, so probably less investments, more discipline, I would say, in the oil market. The question again will be how long will it take for people to forget?
That was Patrick Pouyanné, Total Energy chief executive, speaking to our Caroline Conan in Paris following the company's investor day. Now, the energy crisis in Europe, now rearing its head in China, sits at the crossroads of a vast global energy transition. Here are what some of the energy chief executives on Bloomberg TV had to say this week.
This is just the first inning of a multi-year, potentially decade-long commodity supercycle. You know, it's driven by, you know, we have the war on climate change.
This should be a wake-up call to really speed up the transition towards a fully sustainable economy.
What we need to do is invest more in renewables.
We'd love more batteries to be stored in the UK.
If electricity prices drop, you simply produce more and store it. If electricity prices rise, you simply take it out of storage. So that's really what we're missing right now.
Let's get back to Rebecca Chesworth from State Street. Rebecca, we talked a little bit about the energy crunch and actually what it meant for equities in general. Can you take advantage of the renewable boom? And if yes, how?
Well, I think everything we've heard was spot on. You need that renewables, but it's not coming quite fast enough. And we've definitely seen over the last couple of years large premiums attached to companies that are building that renewable energy supply. But in the meantime, you still need the, let's call it the old school, the old economy, oil and gas, which we've heard from one of your presenters earlier. And that's still something that can be benefited from. It doesn't fit all portfolios. It's not going to work for people who are looking for the climate change, but there is that need to carry on with production of some of the fossil fuels until we get to that new economy and the renewable energy.
Rebecca, is there anything right now that actually you would be particularly buying into? I don't know if there are commodities that we need to use, or old fossil fuel that we need to use, for example, when turbines don't work like they should, so for some of these intermittent power shortages, or whether maybe some of the rare earths.
Well, I mean, so there's two sectors that really play into that. The one area that's seeing a lot of excitement and has done all year is the materials area. So that's the miners. They've benefited from this commodity super cycle and a lot of the metals and the minerals going up there. But you do have some cost pressures in other parts of that sector. So really where investors are looking at now is at energy. The energy sector has a high correlation with oil prices. Oil prices are clearly a key determinant of inflation. So investors have been buying energy as a hedge against inflation. They've been buying energy because it's cheap and there's been that move back to value. And they've been buying energy because it plays into the recovery as we continue to reopen operations post-COVID.
Thank you so much, Rebecca Chesworth, there, Senior Equity Strategist at State Street, joining us this morning. Now, Smart Conversations continue right here on Bloomberg Surveillance Early Edition. Later this hour, we'll be speaking exclusively to the Central Bank of Ireland Governor and ECB Governing Council member, Gabrielle Maklouf. You can send us your questions on IB Plus TV Go. This is Bloomberg.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. Fumio Kishida is set to become Japan's prime minister after the ex-foreign minister overcame popular reformer Taro Kono to win leadership of the country's ruling party. Kishida will likely be appointed on Monday to succeed outgoing Prime Minister Yoshihide Suga, putting him in charge of the world's third largest economy. The self-effacing former banker has promised tens of trillions of yen in extra government spending. China has stepped in to buy a stake in a struggling regional bank from Evergrande as it seeks to limit contagion from the embattled property developer. Evergrande is offloading a 20% stake in Shenzhen Bank to the local Shenyang government for just over $1.5 billion. According to a Hong Kong Stock Exchange statement, all proceeds will go to settle debts with the lender, leaving nothing more for bondholders. New data on the gender pay gap in UK investment banking is due next week, and so far the numbers aren't showing any improvement. A sample of 10 large banks that have already reported showing an average 44.5% difference between male and female hourly wages as of April 2020. That compares with 45% reported the previous year. The figures don't measure pay for doing the same work, but the data show men hold most of the highest paying jobs in the industry. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Thank you so much, Laura Wright there. Now, this is what the markets are saying. One of the big questions as we went into the market open here in Europe is whether the sell-off that we saw in the U.S. would then translate into Europe. For the moment, we're actually seeing the Stoxx Europe 600 holding on to gains. U.S. futures also rebounding. Now, the figure is this. The moves in the 10-year Treasury yield really signaled a turnaround when equities extended losses amid concerns over stagflation, also concern about Evergrande's debt crisis. It seems that the moderation in yields now are providing a breather to investors that have been concerned about some of those moves, some of those valuations. And of course, what they're really worried about is that higher rates may induce the present value of equity cash flows because some of them are lofty. So we're seeing a bit of stabilization. I don't know how long it lasts, but certainly something that we need to keep an eye on. Smart Conversations continue on Bloomberg Surveillance Early Edition. Up next, we speak exclusively to the Central Bank Governor of Ireland and ECB Governing Council member Gabrielle McLaughlin. You can send us your questions on IB plus TV Go. We'll be talking inflation. We'll, of course, be talking energy. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Jay Powell and Janet Yellen warn of a catastrophe in waiting. They tell Congress that failure to raise the debt ceiling would bring a disastrous U.S. default. A dangerous man, Democrat Senator Elizabeth Warren openly opposes Jay Powell's renomination. And Total Energies chief executive tells Bloomberg that the energy crisis could last until winter. Well, good morning, everyone. I'm Francine Lacroix here in London. Welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 29th of September. Let's get straight to our top story, market story with our Danny Berger. Of course, the focus is very much on equities after we saw the sell-off in the U.S. Today, though, European markets kind of taking it in their stride, actually pushing higher, Danny.
Yeah, they are. Look, we were higher before. We were higher by as much as 1% about an hour or so ago when the markets opened. So at an 0.8% gain, this certainly isn't enough to undo the more than 2% sell-off we saw yesterday in European equities, the worst sell-off in 2 days. But still, it's a little bit of a reprieve. Same goes for U.S. futures, up 0.6%. So we're taking a pause. It's dip buying across the board, whether you're looking at equities or bonds. I do want to say pay attention to what's happening in the gilt market. We're currently basically unchanged. We did move above 1% for the first time since March 2020 in the 10-year, but this really filtering through to what we're seeing in the U.S. But really, the phrase of the day comes from Bank of America, and that's a Pavlovian buy the dip response. That's how they characterize what's been happening in markets. And they say that this shows that we're more fragile. It perhaps could be what's happening today, that we're getting that Pavlovian response that every time we sell off, we go in and we buy the dip. So they say that this only raises the risk of larger fragility shock before the year ends. So this is a warning that they are flagging. And of course, higher yields, still a concern, Francine. I also want to point out the term premium, because even though we are having people jumping back in and buying debt today, we have seen the term premium, or the compensation that investors are demanding to hold 10-year paper, creep back above zero for the first time in quite a few months. Again, this just really tells us that investors are concerned. They see risks out there, be it inflation, be the debt ceiling, and they are demanding more money to hold 10-year paper versus short-term paper that they just roll over. So again, Francine, this is somewhat behind that yield rise as well.
Danny, thanks so much. Danny Berger there with the very latest on market moves, especially yields. So while Europe is enduring the fastest price increases in a decade with a rate of 3%, ECB President Christine Lagarde said the spike is largely transitory. Now, she points out that forecasts show inflation could be as little as 1.5% by 2023. The Irish Central Bank Governor, Gabriel Makhlouf, however, believes this forecast is too pessimistic, that 1.5% by 2023 is too low. We are delighted to be joined right now by the Central Bank of Ireland Governor. He's Gabriel Makhlouf, joining us for an exclusive conversation, currently participating in OMFIF's Sustainability Policy Institute Symposium. So, Governor, thank you, as always, for giving Bloomberg a little bit of your time. Let's start by talking about yields. If you look at bond yields, they've risen pretty sharply since the ECB meeting this month. How much of a problem is this for the euro area?
Well, good morning. It's good to join you again. I mean, I think the vaccination program has worked and economies are recovering. And that's very good news, and we should recognize that. What we're seeing out there is a bit of a conundrum, because we're seeing labour markets slack, but we're also seeing supply blockages, perhaps not unexpected in view of the pent-up demand, certainly in services. So I think we need to see this play out. And I heard what you said just a few seconds ago about inflation. I mean, I completely agree that what we're seeing today is transitory. It's driven by transitory factors. But we do need to do two things. One, we absolutely need to be conscious of the significant shock that we've just experienced and that we're now coming out of. And we need to be aware of the risks that some of these supply shortages and blockages actually persist, and they may turn out to feature in inflation down the road. So we need to be humble that our models are not necessarily used to operating with the sort of pandemic that we've just been through.
So, Governor, are you saying that actually some of these supply chain issues, some of these higher prices will have an impact on inflation, or could they even have an impact on the economic outlook for the euro area?
No, I mean, I think I didn't say will, I said they could, and we need to be extremely vigilant and observe the data and what's happening. But we know, for example, just to pick one example, that the semiconductor issue, which is a blockage, a supply issue right now, especially for the car industry, some indications that I have read talk about some manufacturers taking till the end of next year to come out of that. So that for me is a sort of signal that we need to be cautious about exactly what's happening and what may influence price pressures down the road. I'm not saying will, I'm saying could, but I think the economic outlook overall actually is positive. I think we have to recognize, as I said at the very start, the restrictions are being lifted and we're seeing economies recover. There are absolutely risks out there, and there's a degree of uncertainty we should all be aware of.
If supply shortages actually last longer, are they more likely to entrench faster inflation because of wage growth?
Potentially. I mean, that's the risk that we at the ECB need to be very conscious of and very aware of and ready to respond to if it happens. Of course, the pandemic could have also resulted in structural change that pushes in the opposite direction. So right now, I think it's the key word, I think, is vigilance that we need to maintain. And certainly that's what I'm doing.
Do you think, bond yields having risen will actually prompt the ECB to do something? So either leaning in with higher pandemic purchases or actually, looking at changing something at the margin?
Now, the ECB is absolutely committed to its price stability mandate. We completed our strategy review back in July. We set out very clearly what our plans are. Our main focus right now is to ensure that we understand what's happening to economies and to the euro area economy as it emerges from the pandemic, and that we're ready to respond as necessary. I mean, right now, as I said only recently in a speech, I don't think we should be looking to raise rates or respond to transitory inflation. I mean, I think that would be a mistake. On the other hand, we just need to be very conscious that there is a lot of uncertainty out there, and we need to be ready to respond to it.
We saw a more hawkish turn from the Bank of England and from the Fed. What does that mean for the ECB?
Well, it means that we are seeing economies opening up around the world. And I think, this is good news, right? I think this is good news, and we have to keep remembering that this is good news. And certainly when we talk about inflation, bear in mind that in the euro area, we are looking to push up inflation to our aim of 2% over the medium term. So the messages from the Fed, the messages from the Bank of England, the messages from around the world is recovery is coming. And for us at the ECB, we just need to make sure that recovery comes in a way that achieves price stability.
Governor, if we see entrenched inflation, when would you actually see that?
Well, we're not seeing it right now. That's absolutely the case. I mean, as I said, we are right now, what we're seeing is transitory effects. We'll see that in due course if the data shows it to us. I mean, we'll need to see that, see what happens to wages, see what the response is by industries and sectors. So right now, I don't believe there is a risk of excessive inflation of the sort that I read about in the newspapers, partly because the ECB is absolutely committed to delivering on its mandate. And also, as I said, I think what we're currently seeing are these transitory pressures, but we just need to be very vigilant of the risks out there.
Given what you've just laid out, will PEP actually end on time at the end of March?
We're going to be, well, we're going to spend our December meeting coming to a view on that. I mean, at the moment, my own view is a program that was set up for an emergency at the start of the pandemic. As we see the emergency disappear, there are logical consequences to that particular program. On the other hand, you know, there's a long discussion to be had at the ECB. There's a lot of uncertainty around with what's happening, as I said, in economies. And we're going to take all of these factors into account to ensure that ultimately favorable financing conditions continue. Right now, we've got them, but that's a judgment we're going to be making in December.
So a lot of economists, Governor, are expecting, you know, the asset purchase program to be increased as PEP actually gets wound down. Would that be the right way of looking at things?
I think the right way of looking at things would be to wait till we make our judgment in December.
Fair. When you look at some of the longer-term impact of, you know, climate change and some of the policies related to that, is that inflationary in the long term?
It could be. It could be. It depends ultimately, of course, on what the policies designed to achieve the transition to net zero, what they are, and how industry responds to them. But on the face of it, there will be, in my view, an inflationary impact of the transition. But the extent of it is something that's very uncertain, certainly to my eyes, right now.
And this, Governor, why? Because it's new technology that is more expensive, or simply, you know, because it's difficult to transition?
No, I think it's a combination of things. I think the scale of the transition that's needed in the economies to achieve net zero is very, very significant. And I think probably more significant than many people realize. And right now, there's a lot of talk about what needs to happen. There are some ideas about what needs to happen, but actually we're not seeing a lot of that settle into a state where we can be more definitive about its impact on price pressures and how economies and industries will actually respond to it. I mean, I think we're at an early stage of it.
Governor, thank you so much. Always a pleasure to speak to you. Gabriel Makhlouf there, the Governor of the Central Bank of Ireland, joining us this morning for an exclusive conversation. Coming up, a dangerous man. Senator Elizabeth Warren hits out at Fed Chair Jay Powell and says she'll oppose his renomination. More on that story next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, sticking with energy, the WTO says the energy crunch in the UK and China have different causes. The Director General Ngozi Okonjo-Iweala spoke exclusively with Bloomberg's Haslin Damin.
The energy crunch in the UK and China may be slightly different origin. I think the UK is more of a labor problem. Not the supply of oil, but getting it to where it's needed. I think, with respect to the recent situation in China, where factories have been asked to cut down on their energy use, that will definitely impact trade. We are at a period when there is a demand, pent-up demand, due to the fiscal stimulus that was given very appropriately by many countries to households and businesses. There's a lot of demand on the side of households, but there's also a lot of demand on the side of businesses who are some of them are stocking up for inventory purposes. This is another way they manage risks. So if you put the business demand together with households and you mix that with a cut in supply coming from China, yes, definitely, I think this trade will be impacted. I hope not for long. I hope it's temporary.
Might it impact China's growth because it is already slowing? Chinese manufacturers are curbing production. This is the latest shock to global supply chains, already delayed by, port delays, chip shortages, saddled with soaring commodity prices as well.
Well, Haslinda, when we've seen a lot of supply chain disruptions at the beginning of this COVID pandemic, and then, supply chains became resilient and it really moved goods around, especially medical goods and supplies. But now, at this part of the pandemic, we are seeing disruptions again. And discontinuities. And that is because of what we spoke about, the demand that is pent up. And of course, if you have factories slowing down and, not being able to produce as much, that is going to impact growth and the recovery. So that's why I say I hope it's not for long, because that will have a feedback loop into the rest of the global economy.
Well, that was the WTO Director General Ngozi Okonjo-Iweala speaking to us exclusively. Now, few positions in the world have more sway over the movement of markets than a seat at the Fed. It's where American monetary policy is set, from which virtually every asset class takes its cue. Two Fed presidents resigned this week after disclosing trading activity conducted last year. While no rules were broken, it's drawn intense criticism and raised ethical questions. And at a congressional hearing yesterday, Senator Elizabeth Warren criticized the Fed chair to his face, calling him a dangerous man who has made the banking system less safe. Now, she also opposed his re-nomination. For more on all of this, we're joined by Simon Kennedy, Bloomberg's executive editor for economics. Simon, great to speak to you. So first of all, Elizabeth Warren was pretty punchy. What are the accusations that she's leveling at Jay Powell?
So her main case is that as kind of the head regulator, Jay Powell has loosened regulations on Wall Street and banks, and obviously she has fears of the 2008 financial crisis, a period that led to her being elected to the Senate because she was so outspoken about how Wall Street had behaved in those circumstances. Powell pushing back, saying that banks are better capitalized now, but certainly for Elizabeth Warren and some on the progressive side of the Democratic Party, the argument is that he's been a bit more light touch on regulation than they would have liked.
So, Simon, give us a sense of, first of all, whether that actually impedes his renomination. What's the thinking of that? How does Joe Biden, need to keep the progressives on side?
So the thing to remember here is that Jerome Powell is a Republican. He was nominated by Donald Trump, and so there are some on the Democratic side who will argue that that Joe Biden should do what Trump did, which is put one of their own in the Fed. Typically, the Fed has been a non-political. People of different political persuasions in the White House have elected chair people from the other party, and some on the left, including obviously Elizabeth Warren, feel that you need to put someone in there who's tougher on regulation. The candidate out there that would fit those descriptions are Lael Brainard, who's currently on the Fed. But that would probably be a harder confirmation battle for the president. Jerome Powell has a significant bipartisan support. He would obviously attract the votes of many Republicans, some Democrats, and that would probably give him quite an easy confirmation path to a second term. At the same time, the progressive part of that Democratic Party, extremely vocal. Elizabeth Warren is a spokesperson for that group. We wait to see what other members of that caucus say. But it slightly clouds the focus for President Biden.
Thank you so much, Sammy Kennedy there, our executive editor for economics, joining us on, of course, this very important developments. Now, coming up, Peloton extends declines following news that Amazon is launching a rival service called Halo Fitness. More on that next. This is Bloomberg. China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
When you went to Harvard Law School, did you say, maybe someday I'll be on the Supreme Court?
Anybody who thinks maybe someday I'll be on the Supreme Court, I don't want to say there's something wrong with him, but there is something wrong with him.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. So Amazon is launching a service called Halo Fitness, which will include video workouts from top trainers and personalized nutrition tools. The service will actually rival offerings from Peloton and Apple. Now, for more on all of this, we're joined by Bloomberg's Laura Wright. So, Laura, good morning. How, first of all, is Amazon entering the fitness space?
That's right, Francine. Well, we heard yesterday that Amazon is entering that interactive fitness space with Halo Fitness. Now, it's an application. You download it on your mobile phone or any other tablet. It includes over 100 workouts. Now, how to get your hands on this? After a 6-month trial, you can access it for $3.99 a month. It can also be paired with the Halo Band, a wrist-worn device which can monitor heart rate during workouts. And this really filters into Amazon broadening its subscription service offering. Now, off the back of the news, we saw that Peloton shares declined. They sold off sharply yesterday. The stock trading at the end of the session down around over 4%. So Peloton, they've got some competition. Peloton was actually one of the big pandemic winners, but they've struggled year to date as economies reopen and consumers are no longer stuck at home.
So what other products, Laura, did Amazon actually announce yesterday?
We heard about the launch of Astro. It's a home robot, very small. It can move 1 meter a second. It has a screen, even cup holders on the back, Francine, if you're feeling lazy and would like your coffee delivered to you. But again, the wider theme here is about this diversification into electronic products. We have the Alexa, there's the Amazon Fire TV, now the Astro robot. So year to date, if we flip up the screen, Amazon has actually underperformed other FANG stocks. It's moved sideways. So really, this broader diversification into electronic products is part of Amazon's strategy to gain more market share and maintain its valuation. But one investor seemed pretty unconvinced, Richard Windsor from Radio Free Mobile. He struggled to see the relevance of this product, stating no one is really sure what this device is for, other than having a dog that doesn't need to be house trained, which is why it's going out as an invitation-only product at launch. Francine, do you fancy one?
I mean, maybe. I don't know. Does it cook? Does it exercise for me, Laura? I'm going to look into it, but definitely. I need a little bit of help. We all do. Laura right there with the very latest on some of these cool Amazon products. Now, Bloomberg Surveillance Early Edition continues in the next hour. Danny Berger and Kaylee Lines join me. Look at markets. We talk energy. This is Bloomberg.
Boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Watch Bloomberg Surveillance to stay on top of the latest market trends, commodity trends, and fashion trends.
Are you going out for a fitting on a base suit?
I'm going to go and get a base suit. The crowdfund was very profitable.
$100,000.
About 100K, which is what it would take for me to wear that suit on this network. How do you get that bulky fit? I'll find out. I'll have a chat.
You get
the bulky one.
You know, I'm channeling the president.
Look at those markets.
Don't taper the pants. Equity futures down
so
6.
good in a base suit.
Keep dreaming.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The key challenge is to ensure that we do not overreact to transitory supply shocks that have no bearing on the medium term.
Clearly, inflation this year is going to be above 2%. Just the experience so far this year makes that clearly true.
As the economy continues to reopen, we are seeing upward pressure on prices, particularly due to supply bottlenecks in some sectors.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, September 29th. Our top stories today. Rebound. U.S. futures, indices futures, and Europeans show signs of recovery a day after that massive sell-off. Doom and gloom for the Democrats. Progressives and moderates battle over President Biden's economic agenda, while the government is at risk of defaulting on its debt. And China to the rescue. Authorities take a stake in a struggling regional bank owned by Evergrande. It's an attempt to limit contagion from the embattled property developer. Well, good morning, everyone. I'm Francine Lacqua with Danny Berger in London, Kelly Lines in New York. Matt Miller is off this week to get hitched. Kaylee, the markets, actually, we were expecting some kind of fallout, given what we saw in treasuries and given what we saw in U.S. markets yesterday. But actually, Europe stabilizing, bond yields stabilizing.
Yeah, buy the dip seems to be the theme in Europe and the U.S. this morning, Francine. That wasn't necessarily, though, the case in Asia. Actually, stocks overnight were broadly lower. The MSCI Asia Pacific Index had its worst day in about 6 weeks. Even Japan was a big underperformer, the Nikkei falling about 2%. Of course, Japanese markets closed just before the results of the vote for the next leader of the ruling party were announced. Fumio Kishida will be, it looks like, Japan's next prime minister. Stocks were also down in South Korea, in Taiwan, in China, though a little bit of outperformance from Hong Kong. The Hang Seng up about 0.7%. Of course, the story the market is still paying attention to is what's going on with China Evergrande. They have another dollar bond payment due today after there is no indication that they paid the one due last Thursday, getting another downgrade from Fitch because of that. But China also stepping in a particular way, buying a stake from a struggling regional bank, a 20% stake from Evergrande, but the Evergrande has to prioritize paying off debt for that bank. So that is a saga we continue to watch. Something else we're watching in China is the possibility of them raising power prices due to the energy crunch. And that actually gave a small lift to some energy producers in China, one of them being Huadong Power. It was up 1.7% in the overnight session. Finally, I would just point in FX to the South Korean won, rebounding off of its weakest level in a year against the dollar, up about 0.2%. Now here in the U.S., as I said, buy the dip seems to be the name of the game today. We saw steep declines for equities, the worst day for the S&P 500 since May, the worst day for the NASDAQ 100 since March, as we saw yields spiking higher. But those moves are reversing today. We have S&P futures up 0.7%, and we are seeing the VIX come down after spiking to around a 25 handle yesterday. Right now, we're at 21.88. Of course, these moves in the equity market come as the bond market also gets a bid. The 10-year yield moving lower by about 3 basis points. We're back down to 150. And then pointing to crude as well, Danny, also retreating today after giving up gains yesterday. WTI down about 0.8%. Right now we're trading around $74.65 a barrel.
very similar dynamics happening here in Europe, Kaylee. And one thing just adding fuel to this very positive day is some breaking lines about Euro area September economic confidence. It not only has it risen, it has beaten estimates. It came in at 117.8. The estimate was 117. So that's some more data to say, okay, things are getting better. People are more optimistic. But to be clear, we were already gaining here. And it is really just a reversal from yesterday. You have some of these regional benchmarks moving higher by more than 1%. You have Germany, you have France, both of them higher by more than 1%. Spain just shy of that whole round number. But to be clear, this doesn't undo the damage we saw yesterday. It was a more than 2% drop for these European indices. So this less than 1% drop, it's not going to cut it, but it is dip buying, as you said, Kaylee. I think the phrase of the day comes from Benjamin Bowler over at Bank of America, a Pavlovian buy the dip response. That's certainly what we're seeing today. But we are seeing, I think, interestingly, a weaker euro and a weaker pound. Sterling right now hovering around its lowest level since January. These really are these fears of stagflation creeping into the market, of what the central bank can even do if we have this energy crisis continue to weigh. So your cable rate at 135.07, euro dollar at 116.66. Some dip buying happening in yields too. Your 10-year yield still below 1% after hitting that mark yesterday, Francine, for the first time since March.
Yeah, a big interview also we had with the Irish Central Bank governor, part of the ECB board, and he was saying, look, we have to watch energy prices. We have to see whether it translates into something more substantial in terms of inflation. He doesn't see at the moment, but he reminded everyone that the ECB needs to be ready to act. Now, look at what else is ahead today in the U.S. Senate Democrats are seeking a vote on a stopgap funding bill to avert a government shutdown. The inaugural meeting of the Trade and Technology Council is also set to kick off in Pittsburgh, where officials from the U.S. and the EU are actually set to meet. Now, U.S. Defense Secretary Lloyd Austin and Joint Chiefs Chairman Mark Milley face a second day of questions over Afghan military's failure and the withdrawal from Kabul, this time before the House Armed Services Committee. Then, 11:45 a.m. New York time, central bank chiefs Jay Powell, Christine Lagarde, Andrew Bailey, and Haruhiko Kuroda participate in the ECB Forum panel. They're likely to face tough questions over tapering, inflation, and global risks. We begin in Washington, though, and Treasury Secretary Janet Yellen, Fed Chair Jay Powell appeared before the Senate Banking Committee yesterday, and here's what they had to say about raising the debt ceiling.
It is imperative that Congress address the debt limit.
I think it's essential to raise the debt ceiling in time to avoid payment defaults of any kind.
If not, our current estimate is that Treasury will likely exhaust its extraordinary measures by October 18th.
Potential effects could be severe.
America would default for the first time in history. The full faith and credit of the United States would be impaired, and our country would likely face a financial crisis and economic recession as a result.
Let's get straight to Anne-Marie Hordern, our Bloomberg Washington correspondent, joining us from our D.C. bureau. Anne-Marie, how much should markets worry about the fact that Democrats want to delink the debt ceiling from this must-pass government funding bill?
I think the markets are paying a lot more attention now because we, of course, are coming up to the deadlines. And as journalists, we all love deadlines. So let's start with avoiding a government shutdown first, Francine. There is going to be a bill introduced in the Senate, potentially for a vote as early as today. And it's, quote unquote, a clean bill. So it doesn't have the debt ceiling in it, but likely it would have bipartisan support, at least to keep the government operating past Thursday. So come 12:01 Friday, the government could continue paying those Social Security checks, troops, et cetera. That's what we mean when we talk about a government shutdown. Then they have the looming crisis of the debt ceiling, which we just heard from Secretary Yellen yesterday. She also wrote a letter to congressional leadership saying that that X date is close to or on October 18th. So that's really what we're working towards. The problem is the Republicans will not sign up for that. So the Democrats at some point potentially will have to go it alone. They're still working out how they want to go about this. There was a lot of debate yesterday on different avenues potentially to take. But if the Democrats were to do it alone, it's about a 2-week process. They have to go through that same reconciliation budget framework process to avoid a filibuster in the Senate. And that brings us just a few days close to October 18th deadline. So you'll see markets really start to pay a lot more attention as we go through the weeks.
Yeah, and time is short. But the real fireworks in yesterday's hearing, Anne-Marie, came from Senator Elizabeth Warren when she pressed the Fed Chairman Jerome Powell to his face on his record on financial regulation and said she wouldn't support him for a second term. Take a listen.
Your record gives me grave concern. Over and over, you have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed, and it's why I will oppose your renomination.
So, Anne-Marie, for President Biden, how does he balance progressives like Elizabeth Warren, who don't want to see Powell reappointed, versus his own Treasury Secretary Janet Yellen and moderates who have expressed support for him?
This is just yet another inconvenience, really, for the Biden administration. And talk about awkward. Treasury Secretary Yellen was sitting right there next to Fed Chair Jay Powell. This is going to be a moment where the Biden administration has to decide really which way they want to go. It's likely that Treasury Secretary Yellen carries a lot more weight in the sense that this is part of his cabinet. He trusts her judgment. But he's going to have to, at some point, potentially try to pacify the progressives, which they're also trying to get on board, of course, for Thursday's hard infrastructure vote. So this just shows another divide within the party. Potentially one way the White House could go about this is to appoint Governor Brainard to a higher, potentially vice chair of regulation. That's potentially one way they could try to check both boxes for this. But it's just an inconvenience, really, for the administration that you have really two dueling ideas within their own party.
All right, our Anne-Marie Horton in Washington on Deadline Watch. Thanks so much. Now, from D.C. politics to politics in Japan, where Fumio Kishida is set to become the next prime minister. The former foreign minister won the leadership of the country's ruling party and is expected to be named to succeed outgoing prime minister Yoshihide Suga. Fumio Kishida holding a briefing now in Tokyo. You're looking at those live pictures. Let's get more from Sophie Jackman, our Bloomberg Tokyo deputy bureau chief. So we have all but certain a Kishida incoming government. What exactly does that look like, Sophie?
Indeed, Fumio Kishida winning that contest today. He's not the most popular of the candidates among the rank-and-file party members or indeed among the public. They were big fans of reformer and the current vaccine minister, Taro Kono. But among the senior party leadership and the various factions that make up this party, Kishida was the winner on the day. He has to appoint senior leadership positions within the party, and then he also has to set up a cabinet ahead of a general election. He will probably set up that cabinet just in the next coming days, and then the election must be held by the end of November. What are we looking at with Kishida? He says he is in favor of new capitalism. What does that mean? He's pushing for a stimulus bill of trillions of yen by the end of the year to try to pull Japan out of this coronavirus pandemic, stimulate the economy. When it comes to foreign policy, he was previously seen as a dove, foreign minister for a long time there in the administration of Shinzo Abe. But while campaigning for this position, he took a bit more of a hawkish stance, saying that the Taiwan Strait issue needs to be taken extremely seriously. Yeah. So we'll see what kind of Kishida we get in the coming days.
Sophie, thanks so much. Sophie Jackman there. And you can, of course, continue to follow our coverage of Japan's vote at TLIV Go on your Bloomberg terminal. Now, into China, and it's stepped in to buy a stake in a struggling regional bank from Evergrande. That's as it seeks to limit the contagion to the financial sector. Well, let's get more on this with Bloomberg's Tom McKenzie. Tom, so how significant is this actual deal, or how significant is it the thinking of China trying to limit the fallout?
Oh, it's more about that. It's more about the fact that you do have now state intervention. It confirms that. The price, the dollar number is, look, 1.5 billion US dollars in terms of the stake that they've sold down in this regional bank. But the fact that the regional government came in and bought this part of the stake, of course, puts another piece in the puzzle, because the Evergrande story is like a 5,000-piece puzzle that needs to be put together, and we're slowly getting a number of those pieces lining up. There's a lot more that remains on the table, of course. What this does is confirm the reporting that we had last week, that the government has told local governments and state-owned enterprises to be ready to step in to try and shore up the system without going as far as a bailout, but to be doing exactly what they've just done in the last 24 hours, which is buying a stake.
Right, and shore up the system being the banking system. So if I'm a bondholder, should I be worried then?
Well, this underscores the fact that the priority will be ensuring the stability of the banking sector, and we also know, of course, is ensuring that householders and those people who have put deposits down, about 1.6 million people on these units that have yet to be built by Evergrande, they will get priority as well. Nothing has changed the fact that in terms of the hierarchy, foreign bondholders, those bondholders and those owners of US dollar bonds are likely going to be close to the bottom of the list. We haven't seen anything that changes that dynamic in the last 24 hours or so.
Yeah, and of course, another dollar bond payment, $45.2 million is due today. We will see if that coupon is indeed paid. Thank you so much to Bloomberg's Tom McKenzie. Now let's take a look at some stocks moving in pre-market trading here in the U.S. And I have to begin with Micron. Of course, the chip company reported after the bell yesterday, gave a pretty disappointing outlook because it sees supply or demand for its chips from PC makers waning. That stock is down about 3.25%. But another stock in the chip space, AMSL, which of course makes the equipment that makes semiconductors, gave a more upbeat forecast all the way out to 2025, saying it expects as much as $35 billion because of the supply crunch and chip makers needing to ramp up their production. That stock is up about 1.2%. And an even bigger to the upside is Lucid Motors. Its debut electric vehicle sedan is in production. It's a $169,000 car, can go 520 miles on a single charge, and they expect deliveries to start at the end of next month. So that stock is up 9.4% before the bell, Francine.
Yeah, called the Air Dream Edition. I can't wait until Matt Miller's back so he can tell us if it looks good enough for him or not. So, Kaylee, coming up, Ed Clissold, Ned Davies Research Chief U.S. Strategist, will talk about Treasury repricing. We'll talk about inflation expectations and equities. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
This is Bloomberg Surveillance Early Edition. I'm Danny Berger with Francine Lacqua in London alongside Kaylee Lyons in New York. This morning, I want to talk about the perennial underdog of this market, and that is, of course, the value traders. And I have a chart up here. I want to welcome our radio listeners as well. I'll explain the chart to you. Essentially, I have two lines up here. One is a market neutral version of value. The idea here is that it strips out any other market movement, so you have a very pure exposure to stocks that are cheaper. It's also charted here with the 10-year Treasury yield. And you can see these two things track each other very, very closely. Again, for our radio listeners, both of these were heading higher at the start of this year. So there was some hope that we'd have value outperforming as the cyclical trade, as the reflationary trade picked up. But over the past few months, that had started to diminish. As yields started to drop again, so too did the value trade. However, with this recent spike higher in yields, again, for our radio listeners, we've seen a spike not just in the 10-year yield, but the value trade as well. I now want to bring in our queen of quants, our Justina Lee, Bloomberg Markets reporter. reporter who joins us. So Justina, I definitely stole this chart from you, so thanks first of all. But is it finally comeback time for the value quants?
I mean, that's like really a great question. And I think what we've noticed in recent years is you really need to pay attention to the macro environment. And what that chart shows is that bond yields are a very important factor here, because when bond yields are higher, people are looking for near-term cash flows. They're looking more for cyclical companies, which tend to fall into the value bucket. So if we do see, pretty decent U.S. economic recovery as well as higher yields, with the Fed thinking of tapering, I think that looks like a better environment for value for sure.
Okay, I love that. Quant Queen, give us all of the indications of what we can see actually on inflation. Are we going to see more repricing because of what's happened with, stagflation is now the buzzword. Like, I think they're even talking about in coffee shops here in London.
Yeah, I think that's a great question, because what we've seen in the past week is really like a repricing of, expectations, for the Fed trajectory. But I think the question at this point is whether we need to be worried about, those higher energy costs, higher consumer prices derailing this recovery to the extent where, does it change the Fed's mind, or, does it really change kind of people's expectations of growth going forward?
Justina, obviously energy prices and the bond market are what we've all had our eye on, and that seems to be driving what happens in the equity market. Are equities just completely at the mercy of other asset classes right now?
It seemed to be that way in recent years. And I think one reason for that is we've been in that low rate environment for so long that it's really like dominated a lot of the equity market internals. Because if you think about, what you should invest in when interest rates are low, very often, it's big tech, because, they have really strong structural stories that have very little to do with the business cycle. And you're looking at those long-term profits discounted at lower rates. And I think that's why we're seeing such a dramatic rotation in U.S. equities right now.
At what point, Justina, do people stop buying the dip? Stop buying? Because at the moment, it's like, oh, there's stagflation, inflation, we reprice everything. But let's buy the dip on equities.
Yeah, I think that's right. That's the lesson that I think a lot of retail investors have learned in recent years, is like, you cannot do any wrong buying the dip. But I think that's why inflation is really important, because that usually is the trend that kind of derails both bonds as well as stocks, because it means that, asset value across the board is falling. And I think that's definitely a signal that a lot of people are looking at.
Justina, thank you so much. I love your new title, Quant Queen. Justina Lee there with the very latest on some of these market moves. Now, we'll have plenty more on the indices. We'll have plenty more, of course, on equities and treasuries. This is Bloomberg.
Morning traders, I'm placing an order to sell short euro. The price I'm looking to sell 116.7. Okay, order placed at 116.7. If you're looking to sell euro, if you're looking to trade euro, here is your chance to follow me, copy this trade, and stay with me. I'll speak to you later, guys.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg.
Okay, guys, position open, short position on euro at 116.7. Okay, stay with me. If you manage to sell short this position, stay with me and follow my trade, and we'll make profit on it. I can't tell you how long it will take, but I will tell you that we never sell with losses any positions, and if it will go to different direction, we will arbitrage this position. So we will trade this position. If you want to find out how we do this, you need to get a strategy. It's available on company.co.uk. Okay, stay safe.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua and Danny Berger in London. Now let's get the first word news. And British Prime Minister Boris Johnson says the country's fuel crisis is stabilizing. Johnson pushed back against industry demands to issue more visas to foreign truckers to fix the disruptions in the supply chain. Meanwhile, a retailers association says fewer gas stations have run out of fuel. U.S. regulators are leaning towards authorizing a half-dose booster shot of the Moderna coronavirus vaccine. Bloomberg has learned the FDA is satisfied that the booster is effective in shoring up production. The U.S. has already okayed the Pfizer-BioNTech shot as a booster. The U.S. bank with the most employees, Wells Fargo, has delayed its return to office date again to early next year. The lender will now begin bringing back employees who have been working remotely starting on January 10th. It's the fourth time Wells Fargo has pushed back its return to office date in recent weeks. And Amazon has launched a new robot called Astro, which works with its Alexa voice software. The autonomous gadget can check on pets while a user is away or follow a child through the home on a video call. Amazon is trying to position itself at the center of the booming market for smart home gadgets after a failed foray into smartphones. Astro will initially be sold on an invitation-only basis for $1,000. So it's not cheap, Francine, but it's pretty cute, and I kind of want one.
Me too. I'm not sure what it does still. I read the story 5 times. It does cost £1,000, but it's a little bit like the other guy in WALL-E. We're like obsessed. And I found out both Kaylee and Danny actually have robots that clean around the house.
Yes, I love my robot vacuum, and honestly, I'm not going to spend $1,000 unless it's a vacuum as well. I'm sorry, it might be cute, but it needs to pick up its weight in the household. It's not getting rent for free, Kaylee.
Very fair. My vacuum's name is Edgar, for the record. He's the closest thing I have to a pet.
I was going to say, I just have, small children and a husband. But actually, they don't do the job, so maybe I get a robot. Coming up next, Ed Clissold, Ned Davies Research Chief U.S. Strategist. This is Bloomberg.
There is just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia, like Taiwan, where they're having trouble meeting the demand. The supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance, early edition. I'm Francine Lack with Danny Berger in London, Kate Lyons in New York. Matt Miller off this week. Danny, the focus firmly on the markets. It seems that once again traders are buying the dip, but then so much actually concern about inflation or maybe even stagflation and what that means for central banks.
I still think the phrase of the day comes from Benjamin Browder of Bank of America, that it's a Pavlovian buy the dip response, that markets are now trained to do that. But there are fears that this won't last, and everyone from Benjamin Browder to RBC to Morgan Stanley warning that these are very fragile markets. And Francine, at some point that dip buying trade just isn't going to materialize and things could get worse from here.
Yeah, I don't know what the catalyst is, but certainly, Kaylee, that's what the market is searching for.
Yeah, buy the dip may not work forever, but at least it seems to be working today in both the equity market and the bond market on both sides of the Atlantic. Of course, we're coming off really steep losses in both Europe and the U.S. yesterday, so the gains we're seeing this morning don't offset what happened in the Tuesday session. But nonetheless, they are still gains in Europe. The stock 600 up about 1% at this point. And of course, it was big tech that really lagged hard in the U.S. session yesterday because yields moved so sharply higher. Today, though, as yields come in, big tech actually looks like it may outperform, with NASDAQ 100 futures up about 0.9%. Of course, as I said, yields coming in about 3 basis points on the U.S. 10-year. We're just shy of 151. And also retreating today is oil. WTI is down about 0.8%, trading at $74.68 a barrel, not able to maintain its highest level since October of 2018. Now, of course, with oil moving lower, you can bet energy stocks also moving lower in pre-market trading. That kind of is the story, though we are off session lows, and actually Occidental Petroleum has been able to flip into positive territory. It's up about 0.33% in early hours at this point, though you still see the likes of ExxonMobil and Schlumberger in negative territory, Danny.
Well, Kaylee, on my end here, I have broken out the models, and specifically, I am looking at the term premium to help explain the recent rise in yields we've seen recently. I want to welcome our radio listeners as well. And for our radio listeners, what I have up here is a very simple line chart, and it tracks the premium that investors...
Okay, guys, let's place stop for euro. If the direction will change, we will collect our profit. Stop I'm going to place at 116.65. Just right here. Okay, please do so. Please copy this stop and stay with me.
Ceiling. So because of that uncertainty, they're demanding more compensation for the risk of holding a 10-year yield. So again, Francine, this goes to part of the reason of why we've seen that big move higher across the curve.
Yeah, Danny, let's get straight. I mean, it's a great chart, so let's get more on this with Ed Clissold. He's Chief U.S. Strategist at Ned Davies Research. Ed, what happens to equity markets right now? We're going to see a sell-off continuing a little bit deeper for some of these high valuation stocks like tech, or actually are things going to normalize?
I wouldn't be surprised if we get a little bit more selling over the near term for several reasons. One, it's a seasonally weak time of the year, but probably more importantly, it looks like the momentum in the bond market is probably going to keep going. We'll get a steeper yield curve, as you just mentioned, and we're getting close to the point where historically it has become a bigger problem for stocks. If you look at the spread between the 10-year and the 2-year, if that gets above 1.5% or 150 basis points, that's when the S&P 500 usually runs into bigger trouble, and we're approaching that point. It's not like everything's fine at 149 and everything's terrible at 151. So as we get closer and closer to that, we're going to see more and more of these pullbacks until the market can digest the reality of the situation.
And the reality, Ed, is what? Are we going to see a big rotation actually into value stocks?
Yeah, we're approaching that as well. This is probably a reopening 2.0, similar to what we saw late last year into early this year. So it's probably more than just interest rates. The reality that, thankfully the Delta variant appears to be fading, and the economy is going to reopen more fully. Now, we expect this to be a shorter and not quite as strong of a reopening trade that would favor cyclical stocks and small cap stocks, partly because the market doesn't do the same thing the same way twice, but also we're much further along in the economic cycle. GDP growth is going to be slower than what we were looking at, at the beginning of this year. The stock market cycle is more mature as well, and the Fed cycle is more mature. Earlier in the year, we were talking, Powell was talking about not even thinking about raising interest rates. Now we're debating about when the taper is going to actually start. So all these things are working against those cyclical stocks as well.
And Ed, monetary policy is only one part of the equation. There's the fiscal conversation as well, and a mess that continues on Capitol Hill. How do you think about fiscal policy when thinking about your investment thesis?
Well, the big picture is no matter what they do, it's not going to be as big as the 3 rounds of stimulus that went straight to consumers' pockets in the past year. So if you look at a year-over-year basis, fiscal policy is going to be getting relatively tighter. But it's always was going to be very tough. I mean, the Democrats are trying to thread a very, very thin needle hole with getting infrastructure through, the human infrastructure, and raising the debt ceiling. Everything has to go according to plan, and it's going to be pretty messy. In the end, they'll probably get something through, maybe not as much as what the progressives want, but they'll get something through. But you add on the tapering that's likely to start, monetary and fiscal policy and what the government is doing, is going to be quite a bit less than what we've seen recently.
Within all of this, the context, Ed, of course, is a 40-plus year bond bull market. What is the distinguishing factor between a momentary sell-off that's still taking place in a secular bond bull market versus a regime shift?
It's inflation expectations. If the horse gets out of the barn and we start getting wage push inflation, then it's a totally different ballgame. Then those comparisons to the 70s become more applicable. At this point, it probably is going to be transitory. I think if you want to look out to, say, the next 6, 9, 12 months, I think transitory is probably going to be a little bit longer than what people originally thought. We're looking at some supply chain problems that are popping up all over the place. But the wage push inflation doesn't seem to be, at least at this point, the main catalyst of the inflation concern. So it's probably too early to say that this is a secular shift in bond yields.
But for the equity market, talking about some of those supply chain concerns and higher input costs generally, how does that help you dictate what you do and do not want to own?
Well, you want to use companies with pricing power, so that's the number one thing. But we also want to watch profit margins here. Profit margins have rebounded so quickly. It usually takes 2, 3, 4 years for margins to recover after a recession. They did it in a matter of months. So if margins come under pressure, which is not normal, this early in the cycle, then the earnings slowdown, which is what we're going to see next year no matter what, because we're coming off such a low base this year and growth is going to be the best in 11 years. It's going to slow down. It could slow down even harder next year. And then it's going to be a lot more difficult to sustain the bull market if you get a real sharp earnings momentum decline.
Ed, as chief U.S. strategist, do you spend any time worrying about China and Evergrande?
Yeah, we all have to, whether we want to or not, right? It doesn't look like it's systemic in that it's not a Lehman 2.0 type of event, but it is symptomatic of the reality of the situation that China is not the growth engine that it had been. Demographics there are a challenge too. It's probably feeding into the problems with that one company. But if you're going to look for the driver of growth going forward, you want countries with strong demographics, strong consumers trends, and lots of innovation. Of course, you are talking to the U.S. strategist, but the U.S. really checks all those boxes.
Thank you so much, Ed Clissold there, Chief U.S. Strategist at Ned Davies Research. Now, coming up, easing the supply crunch. More on China's plans for power prices next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The supply side restrictions that are so much at the heart of the inflation we're seeing have not only not gotten better, they've actually, in some cases, gotten worse. Look at the car companies, look at the ships dock, or with the anchors down outside of Los Angeles, and this is really a mismatch between demand and supply, and we need those supply blockages to alleviate, to abate, before inflation can come down.
Fed Chair Jay Powell discussing supply chain issues yesterday. Meanwhile, in China, the government is considering raising power prices for industrial customers and consumers to help ease the growing supply crunch that is threatening to slow growth and further strain those global supply chains. Let's get more on this with John Liu, our executive editor for Greater China. So, John, how bad does the power situation need to get for China to make a move like this?
So it's gotten pretty bad. We've had lots of economists cut their forecast for what growth will be in 2021. If China does raise the prices for industrial users, that might go a long way in solving this problem, because the issue is Coal prices are way up because there's a shortage of supply, but power prices, what generators can charge for their electricity, is controlled by the state. And so you have higher input costs, but those generators are not able to charge more for that electricity, and so there's a disincentive for them to produce more.
So, John, what's the second or tertiary effect of this? How soon can they, put this in place, and what are companies saying?
It would help alleviate this disincentive. So you could see generators produce more energy. Higher prices might mean that companies are going to cut back on how much they use just because of cost. I think one of the secondhand effects will be there's going to be more coal burn, and so there will be more emissions, and in terms of climate change, this is obviously not what everybody's hoping to see.
Given, though, it's the world's second biggest economy, does this affect multinational companies who operate in China as well? What are the effects around the world of China's power crisis?
So I think the biggest effect will be on supply chains. So manufacturing in China, supplying end users in the US and Europe, all of that's potentially going to slow down even more than how slow it is already, because factories are being asked to work 2 days of the week, 3 days of the week. And so there are going to be a lot of orders they're not going to be able to fulfill. We've also heard that companies have started not taking new orders because they know they are not going to be able to fulfill them.
John, we're also getting some headlines from the National Development and Reform Commission crossing the terminal right now. They say China will increase coal imports moderately. They will keep residential power and gas prices stable. And they say that power prices reflect changes in supply and demand. Of course, also in China, aside from the power crisis, what has contributed to a lot of the supply chain issues is really restrictive COVID-related mitigation measures, the kind of COVID zero policy. How big of a factor is that? And if we return to restrictions, if there is another surge, how much could that exacerbate these problems?
The COVID restrictions have been very strict, and that's affected a lot of industries, especially food, frozen food. It hasn't so much touched coal imports. The reason China wants to increase coal imports is because they are asking local producers to ramp up production, but it's really hard to do that in the short term. So the short-term solution is to buy more from overseas. The problem is they're going to be competing with buyers from Europe, from India for a limited supply, and so that's going to push prices up even further, and there's no guarantee they'll get those supplies.
John, we're also hearing, of course, on Evergrande and the fact that possibly we have government intervention at a wider scale. How much do they worry that some of these, price hikes in energy actually hurt them exactly the same time where people are also discontent about Evergrande?
I think this compounds the headaches that the Chinese government has to deal with at the moment. The real concern, I think we saw this action today, is for the banking system. Evergrande owned a large stake in a small lender. They've now sold that to the local government. The proceeds from that sale, though, however, Evergrande is having to use that to pay back the money it owes that small lender that it used to own. So that money is not going to be able to help Evergrande pay off any of the other bonds and various other things it has liabilities on.
John, thank you so much. John Liu there, our executive editor for Greater China. Now, coming up a little bit later today, United Airlines Chief Executive Scott Kirby. It'll be a great way to look at whether the market is actually looking at the reopening of travel industry and, of course, whether people are starting to book their holidays. That coming up at 1 p.m. in New York, 6 p.m. in London. And this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lack with Danny Berger in London, Kelly Lyons in New York. Now, in the latest episode of Peer-to-Peer Conversations, David Rubenstein sits down with the U.S. Supreme Court Associate Justice Stephen Breyer. Well, Breyer discusses how justices try to find common ground with each other on close cases.
What you read about are the ones that the press thinks the public will be interested in, which usually has a political or a social content. And they'll say, those are the most important. I don't know. One of the most important decisions I wrote this last year was called Google versus Oracle. Right. And it took a year for me to write that. It was about copyright and something called programs, interface programs. And I was told that that was very, very important. Well, for me, it was like learning Latvian. I mean, I don't know how I did that. But you see, I'm not saying I see what they're saying. I see what they're saying. And it's true that a lot of the sort of exciting cases are more close.
But do the justices, let's suppose you have a decision, it's 5-4, and one justice kind of go to another justice's chambers and say, you know, your argument isn't so good, and maybe you should do something different, or is everything just done by memos and writing? You don't have people going down the hall and saying, let's have lunch together, and maybe I can persuade you my position is better than yours. Does that ever happen?
Most of it is memo, but quite a lot can be visits to chambers. But if I'm going into your chambers, I'm not going to say, no, your argument isn't so good. This would not be a helpful way to start the conversation. And if you go into somebody else's chambers, you better be prepared to listen to them, as well as hoping that they will listen to you. And then you try to see, and that's what I learned in the Senate, that's what you try to see is, where is there some common ground? And is there common ground enough that you can work with it?
Well, United States Supreme Court Associate Justice there, Stephen Breyer, speaking with David Rubenstein. Now, you can catch the full interview tonight, 9 p.m. in New York. Now, we're joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, you have a great chart. I love the fact you brought it back to 1976, looking at the 30-year yield. I mean, this was even before I was born.
Well, everything was before. You're so young, Francine. Everything was before you were born. This is the 30-year yield. It is what is most out of whack right now, and it really shows the artificiality of a time we live in. You take the 30-year yield, you take out the very high inflation right now, and the real yield plunges. And what is so important, Francine, is we have a massively negative 30-year yield versus the last time we had government budget upset, and also the last time we had crisis. It is a very odd time right now, making this September surreal.
Obviously, the budget and the debt ceiling front and center on Capitol Hill, but the real fireworks came from Senator Elizabeth Warren yesterday, Tom, telling Jerome Powell to his face she doesn't support him for a second term. What's your reaction to that?
My reaction is, we've seen this before. There's nothing new here. It will be decided by the president. It's usually decided quietly. I believe the zeitgeist in the White House is they want Powell to stay, but there's a lot of people, as you know, pushing against that. There's a history of this, Kaylee. That's all there is to it.
So that adds, I guess, to a surreal September. But I wonder, Tom, in the economists you speak to, do we have any more clarity of where the economy goes from here?
It's hugely opaque. And what's interesting is 10 years ago, 15 years ago, economists would boldly go out 12 months. And even there was a tradition they would publish out 6 quarters, I'll say. That's all gone. And right now, they're out a year guessing. And frankly, Danny, they're out to Q1 of 2022, and that's a mystery. You know, people are tweaking along the way in that, but it's very opaque right now.
Tom, who do you have on the show?
We have John Farrow on the show and Lisa Abramowitz. We're making it up. We're making it up as we go. What we're going to be focusing on is the markets. The markets are the number one thing today. Elsa Lingos, you know her, Francine. We start extremely strong.
Great.
With Elsa Lingos with her European heritage as well. And Dan Alpert will join us of the age of oversupply and the supply shocks of 2021.
Tom, I know you're definitely going to ask Elsa about her pound call. It's a pretty good one after everything we've seen in terms of energy shortages because of the lack of drivers in the UK. Tom Keene, co-anchor there of Bloomberg Surveillance, joining us. Now look at what else we're watching. And Kaylee, you're watching at China and Evergrande.
Yeah, I am, Francine. I'm watching China in addition, not just the Evergrande, but the power story there. You're talking about power supply in the UK. It is very much an issue in China, and China saying it will vow to let power prices reflect demand and cost change. But the other part, of course, is the Evergrande crisis. They have another dollar bond payment due today, a $45.2 million coupon. We still don't really know if they paid the dollar coupon that was due last Thursday. Fitch downgrading the company again today, that credit rating, to just above default because they say it's likely they missed that payment. So we will see if they make the payment today. And the question for these bondholders, Danny, is just still a giant question mark. We just don't know what's going to happen.
Exactly. We were talking to Tom McKenzie earlier, who was saying that they are just at the bottom of the list in terms of priorities, so certainly a continual concern for them. Well, Kaylee, I am watching oil inventory, specifically EIA data, which comes out later today. What we want to see is whether or not it confirms data we had from earlier in the week that we saw the first increase of crude stockpiles in the U.S., the first one in about 8 weeks. Stockpiles have been low as part of the reason we've seen oil prices higher, so the way that this data moves could have a big impact on oil prices, Fran.
Now, what I'm looking at is the energy crisis here in the UK. We heard from Boris Johnson. I mean, he didn't give us that much confidence because he says he's hearing supplies are getting a little bit better. If you're in charge of a government, usually it's not your hearing, is that you set policy. And so we're still seeing or waiting to see whether soldiers will, be some of the drivers so that it's not an energy crisis as we don't have the fuel. We have the fuel, it's just not getting to the petrol stations. The other thing I'm watching is, of course, the James Bond premiere. It was last night, so I feel like half of London is hungover today. And it opens tomorrow. It does have an asset price impact. Cineworld actually shares gaining some 13%.
And everyone's going to be buying a new pink jacket to wear? Pink velvet jacket to go see the movie.
Maybe a little bit niche. But something that we'll watch out for very closely. I could see Tom Keene actually in pink velvet.
Oh, yeah, that looks
100%.
More Bloomberg Surveillance. Bow tie, there you go. We'll also hear from Elsa Lingos of RBC and David Rubenstein. They'll talk yields, we'll talk sterling. This is Bloomberg.
That can move the fastest and be the most agile, no matter what change comes their way, no matter how fast it comes their way, these are the ones that are going to survive and thrive. China's a good example of that now. You see across the board some of the rules and regulations that are changing, or maybe the uncertainty that's coming out of the Chinese government, and they're trying to deal with some of the local challenges that they have, both in terms of how to manage the asymmetry between the haves and the have-nots locally. They're trying to deal with the issues of managing data and security and other aspects like that. The companies that can operate in China and around the world collectively in a bipolar way are going to be the ones that come out of this on top.
Are investors going to come out on top, though, or are companies looking to do business within China from the United States Are they going to come out on top at the moment, Bob?
Yeah, it's clear that the investors are in for what I think is going to be a bumpy ride. You see it today in terms of what's happening in the marketplace.
When you went to Harvard Law School, did you say, maybe someday I'll be on the Supreme Court?
Anybody who thinks maybe someday I'll be on the Supreme Court, I don't want to say there's something wrong with him, but there is something wrong.
How did you make the decision to move to the Bahamas of all the options out there?
We've been looking at the Bahamas for a while. They're one of the first countries to roll out any comprehensive regulation for cryptocurrencies, which we think is extremely important for the space and a really positive sign.
When bonds zig, stocks zag, that's really has not been the case for the last couple of weeks.
The market is starting to look forward to the healing in developed economies.
The concern today is whether yields are moving too far too fast.
The Fed cannot, and in my opinion, will not respond to supply-side inflationary shocks.
If inflation does get too high, then it really doesn't matter hawkish or dovish. I think the Fed has to respond.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Equities bouncing back from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. This Wednesday morning, futures positive 33 points on the S&P. We advanced, Tom, by 0.75% after a little bit of a bond market storm.
Well, a little bit of a bond market storm. John, I missed my entry point again. I don't know what else to say. John, draw down the fancy talk when you're sweating like I was yesterday afternoon.
Position closed, guys. As you can see, at 116, 65. 5 pips in profit. Well done, guys. Let's move on. Let's see what other pairs, what other indices will give us profit. Oh, right. You don't have indices here on the screen. If you want to get more trading opportunities, you need to get a strategy. You need to understand how it works. Otherwise, you always will see only pair switches for you. If you're happy with this, stay with me. I'll speak to you later.
Raging debate, and that's what sets us up for surveillance this morning. The bond market is shifted, but how much is it shifted?
Transitory for longer, and a little bit later, Tom, wait for this one. We will hear from a dangerous man.
Over and over, you have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed.
He is a dangerous man to head up the Fed, Tom Keene, and we'll hear from him again at an EC forum a little bit later.
What's so important here is Senator Warren is Professor Warren, and she has astute abilities in bankruptcy, in distress, in workout. And if she makes a comment like that, which is fine, that's her right, of course, representing the People's Republic of Massachusetts. But John, if she's going to do that, she's got to describe the evidence that he's a dangerous man. Yeah. And what's even more absurd here, John, she's actually qualified to do that.
And Tom, what happened? It was scripted. It was to get people like me, chumps like me, to play it. And Lisa, guess what? We fell for it. We'll catch up with DC a little bit later on that story. Who's next to the Federal Reserve? And the president in a bit of a tricky spot here.
Well, that's exactly what I wanted to really articulate, this idea that you have him trying to get the progressives on his side as he tries to push forward his agenda, at the same time that he has a lot of support internally and on a bipartisan level for Jay Powell. I mean, honestly, how can they get a Senator Warren pick through a split Congress that is so controversial right now and so bifurcated?
Going to be tricky. This market's tricky too. Let's whip through this price action for you. Equity futures up 34, bouncing back 0.8% on the S&P 500. Last couple of days have been really, really difficult. The S&P 500, biggest one-day drop since May. The NASDAQ, biggest one-day drop since March. Yields come back in south of 150, 149.42. Yields in, Lisa, 4 basis points.
Yeah, and the backdrop of this has been a lot of exogenous risk. risks. Not only you have the power issues over in Europe, over in China, potentially here in the United States, but you also have the Evergrande issue. For now, it seems like China has successfully contained the potential contagion. Today, Evergrande is expected to owe $45 million in a coupon payment on 2024 dollar bonds. They are not expected to pay. This is not good for the bonds, not necessarily good for the stocks, but honestly, people don't care on a broader level anymore because China has stepped up and actually taken many more aggressive steps, including forcing Evergrande to sell off part of a bank that was really exposed to Evergrande and using the money, the proceeds, to make good on some Evergrande obligations. Basically, none of it will go to bondholders. 10 a.m., we got U.S. August pending home sales. This has been a backdrop, this slowing of some of the home sales. But if you really take a look at what's underpinning that, it's just sky-high house prices. The record increases in house prices for 3 months in a row, 20% year-over-year gains. I mean, it really raises a question for the Federal Reserve to really answer, which is at what point does this become unsustainable? And really, oil is still very much in the forefront. 10:30 a.m., the EIA crude oil inventory report. How much do we see inventories continuing to be depleted? How much do we see this bleeding into the strong oil story that we've seen with oil prices going to the highest since 2018, John?
Lisa, thank you. Thank you very much. This lineup a little bit later this morning, Tom, 11:45 Eastern Time. Bailey of the Bank of England, Kuroda of Japan, Lagarde of the ECB, and Powell of the Federal Reserve at an ECB forum. What are you looking to hear from that, Tom?
They're all going to do everything they can to not say anything. And so, yes, it is if somebody says one thing, but it'll be interesting, John, as you mentioned, I believe, yesterday, can they get coordinated? Can we see a transatlantic linkage here? Any whisper of that is what I would listen for.
Joining us now on this, Elsa Linios, RBC Global Head of FX Strategy. Elsa, we've got to talk a lot about what's happening with this dollar, a real breakout in the past 24 hours. Let me start with this one, though. Is Chair Powell a dangerous man from your perspective?
I think you summed it up well when you said Senator Warren was looking for people like you to bite the bait, and you did.
I look, Elsa, at the dollar strength. You are truly expert at summing it all together, particularly with a continental Europe perspective. What is the character of this dollar strength?
That's a really interesting question, Tom, because I think what was so unusual about yesterday was the bond and equity joint sell-off. So, you know, we're used to being in an environment where either bonds are rallying and equities are selling off or vice versa. But when bonds and equities are selling off together, historically, that actually means a very positive environment for the US dollar, even against what you typically think of as a safe haven, like the Swiss franc.
Well, let's get back to Lignos 101. Is this going to be about relative interest rates, or is it going to be about flows of capital?
You know, both clearly matter. When we think about capital flows, we've done a lot of work in the past looking at how much money European investors have piled into US equities. And I was actually just updating those charts last night, and you can see that's increased over the past year. So if we do go into an environment where US equities were to underperform in relative terms, that would potentially create some downside risk for the dollar. If this is a global risk-off environment, though, or if it's a global equity bond sell-off, that's a far better environment for the US dollar. So the capital flows, like you say, are really key.
What's the pain trade right now, Elsa? The dollar getting a lot stronger or the dollar materially weakening?
Honestly, I think, you know, people are relatively lightly positioned in FX. Probably the biggest pain trade would be a massive increase in volatility. Nobody is looking for that now. You know, we've seen people try to position for that before, and it's failed every time. And so we're in this environment where we just don't really expect anything to happen.
What about the euro weakness that we've seen, the euro weakening to some of the weaker levels that we've seen in about a year? Is this the story, or is it more a dollar story?
It's definitely more of a dollar story. I'm really excited to see it happen because that's been our call all year, and it was a pretty lonely place to be in January. But it's certainly a broader US dollar move. It's nothing specific to the euro. In fact, if you look at the euro against pound yesterday, it was actually a relative outperformer.
Let's get to that sterling story, Elsa. If we can bring up sterling intraday, we came really close to breaking 135. We've had a hawkish tilt from the Bank of England. It's failed to anchor sterling. You've got a short on here, Elsa. What's going on?
Yeah, like you said, we've got a short sterling CAD recommendation at the moment. We put it on at the start of the week. It's really looking at the upcoming event risk in the week ahead. I think what's happening at the moment, we had a lot of questions on sterling yesterday from clients. You know, people were wondering, is this the Bank of England making a policy mistake? are we beginning to price credit risk for the UK? You know, it's very unusual to see yields going higher and the currency going lower. That's typically more what we see in emerging markets. I wouldn't try and read too much into the price action of a single day, but I do think that the Bank of England is very optimistically priced in my view, and we should think of it more as a best case scenario in terms of how many hikes we could get rather than a central scenario.
So that's really important. You push back against this idea that we'll have this rate path kick in at the Bank of England anytime soon. Why is that, Elsa?
But it's not so much that won't get hikes at all. It's more that I think people are factoring in too many hikes. And the Bank of England have been fairly clear with us in saying, you know, we'll hike a couple of times and then we'll pause. And alongside of that, you have all sorts of supply chain disruptions at the moment here in the UK, which are creating some inflationary pressures, but not the type that a central bank would typically respond to. Governor Bailey was very clear on that on Monday, and I don't think people have necessarily listened to that message and factored it into the way they're trading sterling.
Elsa, really, really important comments there at the end. Elsa Linos, RBC Global Head of FX Strategy, with sterling breaking down yesterday in a big way. Tom, there is this fear that developed market economies face some kind of EM dilemma, this classic EM dilemma of upside risk to inflation, downside risk to growth, and a central bank that has to tighten prematurely. And every single day you get a move like you got yesterday in sterling, there is just this knee-jerk reaction to plug in the story of the day, to try and drum up the idea that that's developing. I just think it's too early to make a big statement about what's happening off the back of a single day's price action.
And John, what I noticed yesterday diving into my beverage of my choice is it was everything against the dollar. Yeah, the Turkish lira, and you mentioned EM as well, but it was really a substantial shift towards dollar strength. I went back and looked at trade-weighted major and the broad index, the Bloomberg Dollar Index. John, yesterday was very distinctive for strong dollar.
Lisa, DXY really close to a 94 handle.
The interesting thing is it comes with a backdrop of the United States about to default potentially, with a lot of dissonance in Washington, with disagreement over fiscal aid or fiscal support in any way, that those plans kind of stymied. What's driving this? Is it rate differentials? Well, if that's the case, then the pound should be doing better. Is it inflationary issues? But that necessarily hasn't changed over the past week.
That word potentially is doing a lot of heavy lifting there, Lisa. Default potentially.
Well, understood. However, if you think that that's actually a credit risk, the reaction in markets isn't really representative of that. Listen,
go on, Tom.
John, can we do science with John?
You want to do science with John?
Let's do science with John.
Right
Folks,
now?
I've never seen this. Ever. This is a
science
level
with John?
This is
Go on.
Geology with John. We're doing it this morning. This is the Canary Islands, a northwestern island, La Palma. John, this hasn't happened in 50 years, and this has gone from serious to way, way serious. This is lava into the ocean and much more. It's just simply about the volcano coming on towards what they call explosive phenomenon. John, you and I have never seen this.
Phenomenal pictures coming out of there,
Stunning.
Tom. A story we'll stay on top of. Tom Keene, Lisa Bravitz, Jonathan Ferro. Equity futures bouncing back up 33, up 0.75% from New York City this morning. Good morning. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. On Capitol Hill, Democrats have hit a wall in their attempt to avert a government shutdown, avoid a debt default, and advance President Biden's $4 trillion economic agenda. Democratic factions remain at odds over the giant tax and spending package. Meanwhile, time is running out for the funding the government and raising the debt ceiling. The fear of another 2008 meltdown is what prompted Senator Elizabeth Warren to denounce Fed Chair Jerome Powell to his face as a dangerous man. Warren told Bloomberg that Powell is making it too easy for big banks to take big risks. She says the Fed chair should be like a sentry standing at the gates. Warren's opposition could make a rockier path if President Biden chooses to nominate Powell for another term. In Japan, Fumio Kishida is set to become the next prime minister. The former foreign minister won the leadership of the country's ruling party and is expected to be named to succeed outgoing Prime Minister Yoshihide Suga. Kishida has promised tens of trillions of yen in spending. He'll face an immediate test of his broader appeal in a general election that must be held by November. British Prime Minister Boris Johnson says the country's fuel crisis is stabilizing. Johnson pushed back against industry demands to issue more visas to foreign truckers to fix the disruptions in supply chains. Meanwhile, a retailers association says fewer gas stations have run out of fuel. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
嗱，如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港易嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
Bloomberg surveillance to stay on top of the latest market trends, commodity trends, and fashion trends.
Are you going out for a fitting on a base suit?
I'm going to go and get a base suit. The crowdfund was very profitable.
$100,000.
Came in at about $100K, which is what it would take for me to wear that suit on this network. How do you get that bulky fit? I'll find out. I'll have a chat.
You get bulky,
get the
John.
bulky one.
You know, on the channel in the press.
Look at those markets.
Don't taper the pants. They
John,
leave you
you
just
look
down
so
6.
good in a base suit.
Keep dreaming.
What have we learned from this Evergrande crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we see many events, right? Maybe in the fintech sector and education, casino, and property. So I think diversification help you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high yield space in Asia? I mean, how are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue, is like a buyer strike because of the sentiment. The Evergrande is hurting the sentiment and people don't want to buy. And other developer because they want to get cash.
From New York City.
We're in London, in Sydney.
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It is imperative that Congress address the debt limit. If not, our current estimate is that Treasury will likely exhaust its extraordinary measures by October 18th. America would default for the first time in history. The full faith and credit of the United States would be impaired, and our country would likely face a financial crisis and economic recession as a result.
Secretary Yellen there on the debt ceiling from New York City this morning. Good morning. Tom Keene, Lisa Bravitz and Jonathan Ferro. Your equity market up 34. We advance 0.8%. It is a bounce back. It is a bit of calm after a bond market storm. Yields are lower by 4 basis points to 149.42. In the FX market, dollar stronger still against the euro. Euro dollar 116.64. We break down there by almost 0.2%, Tom. And crude, it's a break of 75, 74.75. We're down there by 0.7%.
John, I think you captured it nicely with a bit of calm. It is there. There was no, I saw real catharsis yesterday as well. And it's just a shift here back. Again, I look at VIX, 21.68 is nowhere near the angst level of 30. We're just nowhere near that on VIX, 21.70. Speaking of angst, Anne-Marie Horton is our Bloomberg Washington angst correspondent and joins us this morning as we attempt to get through Wednesday. What is the agenda today, Anne-Marie?
The agenda today really is going to be about, on the Democrat side, figuring out if they're going to have the votes for this Thursday bipartisan infrastructure, the hard infrastructure. It doesn't seem like the progressives are going there just yet. There hasn't been a framework that they're able to sign up for and put those votes to. But really, the main thing today has to be to avoid a government shutdown by Friday morning. So potentially in the Senate, we can have a clean bill, which means there's no debt ceiling suspension attached to that, just to avoid a government shutdown, make her Social Security checks go out, and we could potentially get a vote on that today.
Let me be the ancient cynic. They're going to get that fixed. Let's get back to the debate. As the Washington Post headlines today, they sum them together. We're talking $4 trillion large. We all know it's going to come down as well, but it's got to come down with negotiation. I don't see in our Bloomberg reporting negotiation.
Well, it's cagey right now, and it's elusive. You had Senator Joe Manchin of West Virginia and Arizona's Kyrsten Sinema at the White House again yesterday for meetings with the president and the White House team, and there's no hard evidence coming out of those meetings that they have agreed to a top-line figure to really start getting a framework together that progressives could then say, we are happy with this, we can move forward on this, we can get the details done. So the president even canceling an engagement today in Chicago to make sure that he is squarely focused on the economic agenda. So Thursday's looking like it's going to be, tomorrow is going to be very, very tough vote. You already heard from Pramila Jayapal, the chair of the Progressive Caucus, saying, we will vote for bipartisan infrastructure, but only when we have reconciliation. And it sounds like she has the votes to tank that bill that Speaker Pelosi says she's going to bring to the floor.
This gridlock comes with that October 18th deadline. We heard from Janet Yellen, the Treasury Secretary, yesterday speaking to Congress, saying that that is when the United States would run out of money. How much is that a drop-dead date in terms of when Congress has to actually pass something?
So there was a lot of negotiations yesterday about potentially different avenues they could take. Senator Schumer was trying to get the Republicans, 100 senators would have to back up for this, but to just have a simple majority vote, meaning Democrats do it themselves, but not via reconciliation. And the Republicans pretty much tossed that idea. It does look like the Democrats are going to have to go this alone unless they take it to the brink and try to get Senator McConnell to come back on side, because they are at that point of a potential default. If they go via reconciliation, though, what that means is a little bit more cumbersome, a lot more labor intensive, 2 rounds of Senate debates, vote-a-ramas into the evening, and that would take about 2 weeks' time. So that gives you a leeway if they were to start that today with about 5 days to October 18th, and it doesn't look like they're going to be starting that today.
Meanwhile, talking about Treasury Secretary Janet Yellen, I'm curious about her position on Fed Chair Jay Powell, given the pushback that we heard from Senator Warren yesterday. How difficult will this be for President Biden to both get some of the progressives on his side while also figuring out who he wants in that seat come next year?
Quite an awkward moment, really, when you had Senator Warren calling Chair Powell, sitting next to Secretary Yellen, a, quote, dangerous man, saying she